Hello traders. I hope you're doing well on this Thursday, fourth day of the week, of the work week, so of the markets open week, and we had the CPI. So we had the consumer. Let's take a look. So if you open up the Forex calendar, consumer price index, and today we're getting the producer price index. Now the CPI came in same as the forecast. I did take a bet right before the CPI event. The bet was that the CPI was going to print even lower than the forecast. So I bought the Aussie dollar, betting on dollar weakness. That didn't happen. Instead, it printed the same as the forecast. So I closed this trade for break even. Happy with the attempt. It was worth a stab. And the price then went up a little bit, but then retraced, as you can see here. Okay. So today, we're getting the PPI, Producer Price Index. Now, the PPI is usually the precursor for the CPI. The PPI tells you how much inflation are the producers under, let's say. And the thinking behind it is usually the producer inflation gets transferred to the end consumer. So what you will sometimes see is you will see the PPI. So you will see the PPI going up and the CPI lagging behind it, okay? Because the costs from the producers definitely don't get paid by the producers. Like 95% of the time it gets transferred to the consumer, okay? So what is the forecast for this one? Let's take a look. Let me see if we're doing okay with the viewership. Okay, it seems fine. The forecast is for a bit of a higher print for the PPI. Yeah, a bit of a higher print. We can take a look at the one on the Edge Finder, which is the year-on-year. So let's take a look at that one. Data, inflation, PPI. Okay, so this is the year-on-year number. Now you may get confused a bit with all of these inflation prints. There's year-on-year, there's month-on-month, there's a core month-on-month, core year-on-year, core PPI, regular PPI, year-on-year PPI. The one that I focus on the most is I focus on the CPI year-on-year and the PPI year-on-year as well. So the highest print was in June, 6.5%. July then went to 5.5, and the next one is probably a bit higher than 5.5. That's probably going to be the forecast. So I can tell because the month-on-month is supposed to be a bump from 0.2 to 0.3, and the regular PPI is supposed to be from negative to positive. So a bit of a higher print. Now, this could be a little bit bullish for the US dollar. It could move the Fed watch tool. So the Fed watch tool could be moved a little bit in favor of a hike in September. Okay, that is something that could happen. So we will see. I'm not trading it. I don't have any positions that are connected with the dollar going into the PPI. Swiss yen, I just have a short, but this is connected with the yen and betting on yen strength. So for the Aussie dollar, I want to get into a long-term buy, so more of a swing trade on the Aussie dollar, but I'm not exactly sure when would be the right time to buy. Would it be before the next CPI? Would it be before the next Fed meeting? That is something that I'm looking into. So what is the most efficient time for me to buy the Aussie dollar for a swing trade? So for more of a longer term hold, let's go to the top setups. Let's find AU. Bullish, score of 6. So that's great. We have a confluence from the Edge Finder. And I also have on the watch list, I have gold, which is finally red on the day, maybe starting to pull back a little bit. I'm looking for a pullback to 4,300, something like that. at that point, I would be happy to get into a buy position. I think the current price is a bit overextended. I don't think we get a bullish catalyst anytime soon. I think we need to wait for September to get another bullish catalyst. What is great is the edge finder is giving a bullish print. So again, very bullish print, really good confluence, and I just need a bit of a better price. So I just need a bit of a pullback, bit of a better price. 200 EMA should act as support, placing a buy limit just before that at, let's say, 4,300. That makes a lot of sense. That makes a lot of sense to me. If you're a bit confused about the stream schedule, just want to explain that briefly. James is traveling today, and he was traveling yesterday, so he couldn't make it. He's going to be on tomorrow again. So we moved everything up by 1 hour. So you have me, then it's Alan, then it's Nick and Chris Pulver, Miko, then it's Alan and me with a joint segment, and Tiger finishes off the whole thing. So if you want to get the schedule, just go to A1 Trading live stream schedule, and you'll find all of the information for every single day. It is updated daily. Okay? So looks like Nick has joined. Good morning to Nick, and also good morning to everyone in the chat. Trading going good. Yeah, it's a bit of a slower month. So August, not much has happened. My last big trade was on the yen, essentially selling Swiss yen, closed 60% in quite decent profit and letting the rest run. But August hasn't really been that active, and it's normal. Like most people, most market participants are on vacation, taking a break with their family, so the volatility will be lower. And also, like the CPI yesterday was pretty much a non-event. It came the same as the forecast. Yes, a bit lower than the previous number, and yes, the probabilities on the Fed watch tool have changed a bit in favor of a cut, but there hasn't been much movement on the dollar. If you just focus on the DXY, it actually went up yesterday, which is pretty interesting. So you would think on a cooler print, on a slightly cooler print, the dollar would sell off, but it actually went up a little bit, and it's down on the day. It's pretty much stuck in this range, I would say. So this is the range, and we seem to be stuck inside of that. I don't think the PPI will move the markets much today. Again, I think it's going to be pretty much on point, on forecast. I can't find... Usually I like to check poly market for a possible bet on the PPI. We can take a look. So US PPI July. Maybe we find something. Yeah, actually we do have a bet. So it ends today, which is correct. And the bet is lower than 5.1%. So if we look at the edge finder, we look at the PPI. Looks like the bet is on a cooler inflation. Current number 5.5%. Poly market PPI says an 85% chance that it's lower than 5.1. The volume is not that high, so the actual signal is not that strong. You would need the volume to be at least above 100K. The spread is 2 cents, which is okay. It would be a bit better if the spread was 1 cent. You just always need to look at that. So if you're looking for signals on betting markets like Kalshi or Poly market, always check the volume. If the volume is 100K or lower, the signal is not that strong. So the signal is less reliable, I would say. And yeah, I'm not betting on this. I'm not betting on this. Well, I'm definitely not betting on Poly market. But what I sometimes do, like yesterday, I go ahead and I buy the Aussie dollar before the event, right? But this time for the PPI, I'm just flat. I have the Swiss yen short, and that's about it. I have some stock positions. So I'm running RHI, VLO, which is doing quite nicely. CRWV. This is a classic breakout trade. this is again a classic breakout trade. This is an episodic pivot. So if you read the latest Market Wizards, you would know about episodic pivots from Kulamagi. He's like the first trader that's interviewed. Basically, the strategy is you get an earnings push to the upside, gap up of at least 10 to 15%. The fundamentals need to be solid. So the reason for the gap up needs to be solid. And for CoreWeave, the reasoning is that basically, so for CoreWeave, they have a bunch of GPUs, which they thought were only going to last 6 years. And now they have deduced that they will probably last 9 years or maybe even longer. So they will get a lot of extra revenue from having old GPUs and using them. So the main thesis for GPUs, for let's say artificial intelligence, was that they are like smartphones. So every single year there's a new smartphone, you get rid of your old one and you buy the new one. But the case may actually be that the GPUs are like airplanes, where you can use them for 10, 20, 30 years. Well, maybe not 30 years, but 10 to 20, and get much more revenue out of the old ones. So that's kind of the new thesis about GPUs. We will see if that's right. The market seems to think so. The gap up was pretty significant. Like if you look at the percentage, around 19%. And the bet is that this thing continues going to the upside. Okay. Now, something that you can look at is if you look at the stock box, the current very popular strategy that I saw is looking at sectors. Okay, so you're looking at sectors, you're trying to find the winning sector, and then you're trading the best stocks in that sector. It's a strategy that's not yet super popular, which is great because a super popular strategy will probably stop working pretty soon. Well, here on the stock box, you can find the sectors, and you can try and deduce which one is the strongest. Like oil and gas right now is a strong one. So if you can find the top picks in the energy sector, the top stocks in that sector, that could produce a really nice trade. Hello, Nick.
Hey, Marco, keep going. I'm loving this. I wanted to join because I was just looking at some stocks as well and wanted to exchange ideas.
Yeah, just to finish up, I think I actually have one energy stock here. Yeah, I think VLO is supposed to be an energy stock. Let me just see. Oil refining marketing. So this is the principle, basically. So you find the top sector, which in this case could be oil and gas. You find the best trade in the sector or the best stock in the sector, which in this case could be VLO because the technicals are picture perfect with the pole and the flag and the breakout, and you buy the breakout. Now the management is trailing stop loss, and basically you're waiting for a close below the 10 EMA. Very simple management, very mechanical. You just wait for the price to appreciate if it will, and then close below the 10 EMA. That's when you close the actual position. You can also take partials, put the stop to break even after 4 to 5 days, but that's up to you. So very simple stock trading strategies. And also, if you guys want to get the stock box, I know Nick basically did a lot of work on the stock box, put in a lot of new features. So definitely do take a look at that. The link is in the description, right?
That's right. Should be there. And awesome. You've got code Marco if you guys want a discount.
Yep. Code Marco gets you 15% off. I think your mic is a bit buggy.
Quiet or loud?
Weird. It's too loud, I think.
Okay,
the sensitivity may be too high.
How is this? Is this better?
Yeah, this is better. We have the same one, actually.
Oh, yeah. I don't know why, but my mic in StreamYard has been so odd recently. But if it's too loud or clippy, just let me know and I can hopefully fix it. I wanted to show you another idea. I think you and I, Marco, have watched a lot of probably the same videos, kind of glorifying the stock trader legends that are like momentum traders and things like that.
Yep.
And I wanted to kind of show you just like an example of stock that I'm looking at, like Etsy, for example. This is one that it's not necessarily something like, oh, I don't wake up each day and I'm thinking this is the best investment of my life. I love Etsy. Maybe I do, maybe I don't. But there's a couple characteristics that when it comes to like stock trading that I feel like you and I have both seen in many examples of people who are very successful stock traders. Momentum is like a huge component to it. And if I'm looking at a stock, you mentioned like the energy and gas stocks, like they've got some momentum, they've got some strength here. When I look at this chart, this thing is clearly trending higher. It looks really solid. It's pulled back to a level. I still do like to wait for pullbacks. I know you kind of talked about like the breakout. A lot of times the best breakouts, they just break and they just go and go and go. And there's many styles or entry patterns that I think, you know, you can approach momentum trading with. But I think the big picture stuff that you kind of alluded to is just when you catch the big runner, just to stay with it and hold on to it for a very long time. I was thinking about this morning when I was having breakfast. I was thinking about, you know, one thing that I feel like a common trait amongst everyone who I know that has done really well in markets, like 99% of them are either long-term investors who caught ginormous trends by holding on to great stocks for a long time, or momentum traders and investors too. Like it feels like all the big winners out there are holding on to ginormous wins. That's also been my experience in trading. I think you too, like these very one-off rare trade examples are where a lot of the gains come from, is like just a select few trades.
Absolutely. And the way that I've looked at stock traders, especially like in the Market Wizards book, the win rate to them doesn't matter. Like they don't even count the win rate. It's not even in their calculation. So like 20% win rate, totally, let's say average for the one of the best or the best traders in the stock market. It's all about like catching those 10 to 1, 15 to 1, 20 to 1 winners. And those come maybe 2 or 3 times per year. But if you can catch them, well, then you can make a lot of percentage, let's say.
Yeah, that's right. Another one that I've done pretty well on with this style is Visa. I'm not logged into my brokerage account, but I'm long Visa. I've stayed long Visa. And what I realized, exactly what you're saying, like when I've done these trades, it's most of the time they don't work. Like most of the time I take an entry, boop, that looked dumb. Next one, that one looks dumb. And then every once in a while you catch this one trend that just refuses to stop trending. And the longer I trade, I think the less my win rate becomes, because the more I'm just like, if something's not working, I'm so gone so quickly. And then if it runs, I just hold on to it and I try and stay there, because, you know, I feel like one thing that I've maybe early days made the mistake of that a lot of people do is like wanting to take profits really quickly feels psychologically rewarding, but it's sort of like, you know, one expression that I like is it's sort of like you're weeding in the garden, but you're actually just chopping the heads off all the flowers, like all the best growing opportunities. You're cutting them off right at the best time.
Absolutely. And in trading, the thing that is so hard to go through is the clusters of good luck and bad luck. So I saw it in a YouTube video years ago. Essentially, like you have a period where the S&P is flat for weeks, for 6 to 8 weeks, and you just take losses and losses and losses. Yes. And then it starts to trend, like in April this year, where the semiconductors just led the massive move up. And that's when everything starts to work. And everyone can feel like a genius because everyone makes money. So that's why it's even more tough than people think, because the probabilities are highly skewed to those clusters of good luck and bad luck. So you feel like a genius for 3 weeks, and then you feel like complete failure for the next 3 weeks, because anything you put on or everything you put on takes you out. And that's why sticking through that, and what you mentioned, really letting the winners run, which is another super tough thing to do. It makes me super uncomfortable to have an open profit and just watching the trade run without banking anything. And the urge to close it prematurely is very, very high. But the best traders leave it running as much as they can. They follow the mechanical exit rule, and they just kind of push through it. That's why they make so much.
And wouldn't it make exact perfect sense that the thing that is like the hardest for everyone is where the profits lie? Like The hardest thing in the world is you have a trade that's going really well and you really want to just close it out so that you can see that P&L close in your account. And yet that little action there, which is so difficult for people not to do, at least in my personal experience, has led to the most profit. Now, if you're newer to trading, like these sorts of heroic trades that Marco's explaining, they're so rare. Like you have to keep trying to get them, and it can feel like super defeating. Like you said, that's a great example of like if you're trying to catch stock trade breakouts where you are trying to catch a trade where the stock moves higher and the index is just working against you, like every time, stocks generally tend to float or fall together depending on what the index is doing. So it's like if you're trying to catch breakouts here and the market does one of these, that just works against you dramatically. And that can feel super defeating. But then it's like you said, if you stick around, you'll eventually catch these moments. And those, it's like fish in a barrel. It's like easy as anything to catch a good move during that very specific time.
Yeah, as I mentioned, like everyone is a genius when the S&P is going up because 70% of stocks at all times gravitate to where the S&P is moving. So particular stocks may have some earnings on that day and may move in a different direction, but if there's no earnings, no breaking news, they're moving with the SPY. So if the SPY is not going up, the breakouts just won't work. Now, if you have a strategy where you can detect when the SPY is flat and range bound, well, you can save yourself a lot of losses, but it's not going to be perfect. You're gonna take losses. Like,
yeah,
it's just a
it's
fact.
true. And here's the other thing is this is, I think, part of the reason why, for me, I like the idea of trading so many different things. It's because I want to trade where the momentum is. I know you've talked about this a lot. Is like, we always joke about how we have so many traders who are just, obsessed with and focused on trading gold. Now, I love trading gold too, but there are times to trade gold and there are times to trade energy stocks. There are times to trade currency pairs. There are times to trade oil and Asian shares. Like you have so many different things out there. But I think that the classification of momentum is so critical. And I've done a lot of like interviews over time on my channel, and I've been able to interview a lot of like really, really great traders. And what's been cool about it is that there's two types of traders. There's the mean reversion type people, and then there's the trend followers. One is not necessarily inherently better than the other, but I will say just anecdotally, I have experienced more people who are the momentum type traders that are like wildly successful in markets. But the point is, like, you have to kind of just embrace your style. And momentum trading sounds really cool and fun when it's working, and it's a pain in the butt when it's not. Like when you're just catching loss after loss after loss, waiting for the big runner, yeah, that can get old. But I think that the idea of being versatile enough to trade many different markets is really important, because like right now, I actually do think gold looks really good. Like I think gold's broken out. You've got some really strong momentum to the upside. I also really like silver, but this would be an example of like, there's also the macro overlay for me. Like I have to see within Edgefinder or in Stockbox, if I'm doing stocks, I want to see either in stock case, valuation looks okay. Like I don't want to buy a stock that's like ridiculously expensive, because the fall off, you could be down 30% one morning and that can really wreck, a trade. Or in the case of gold or silver, like I want to know that the macro is generally supportive of the trend. And then that's pretty much it. I'm looking for pullbacks and I'm looking to join that trend, and I could totally get stopped out. And it would just be another example of like, oh, got stopped out. Oh, got stopped out. But then eventually you catch the big one.
Yeah. Basically, how I think about the markets is the money is flowing from an asset class to asset class. So in 25, it was gold and everyone was buying it. And that's why I think, like, when I make a video on Instagram about gold, it gets 5 times, maybe even 10 times more views than anything else. I think it's because a lot of new people came into the markets in 25.
Yeah.
But gold has pulled back. And if you look at the historical back tests, once gold has a decade-long run, a massive run to the upside like we saw in 2025, the next year is usually flat or negative. So for all of the people that are calling gold to all-time highs, yes, I think we get a rally to 47, 4,800, but all-time highs and another crazy rally like in 2025, the numbers just don't. The numbers suggest otherwise. So the evidence is completely different. That's why if you can be versatile and jump into a different asset class, like right now the stocks are waking up. That's why I'm trading breakouts. You're trading stocks. So all of the money, all of the interest is going into stocks, which is the next thing. So yeah.
Yeah, no, I think it's such a good strategy in my view to be flexible and trade what is exhibiting the types of behaviors you like to trade as a trader. If you are a mean reversion range trader, then watch for those markets. If you're a breakout and momentum trader, trade those markets. But those markets change. Sometimes gold is a choppy market. Sometimes it is a trending market. And so if you kind of put yourself in a bottle of just saying, hey, I'm only a gold trader, look, I love trading gold, but there are times to just stand clear and do something else.
Yep. And I know of one trader who trades only the euro dollar. Only the euro dollar. Now that strategy worked great when the volatility was high in, let's say, 2020 and 21, maybe in 22. But now, if you check the volatility of the Forex market, it's at all-time lows.
Yeah.
So like his edge is almost non-existent. I'm sorry to say that, but that's just true. So he has a hard time pivoting into other things. And I did the same mistake. I was focusing on 6 currency pairs. Started in 2020, 21. It was great. It was awesome. Volatility was high. But then I was just sitting on my hands for 12 months and it didn't make any sense. So I had to expand.
Look at Bitcoin too. Like what in the world has Bitcoin's gone quiet? And so if you're someone who just says, I'm a crypto everything person, I do understand that it is a good idea to specialize. But my opinion is don't specialize in a particular symbol. Specialize in a craft like macro, momentum, trend following, or for example, if you are somebody who simply trades breakouts, then breakouts are abundant in many different markets. Like they're not, tied to one thing. Now, obviously, you want a little bit of experience in each thing that you are going to consider trading. You want to study it, but the broad concept of momentum is like it's an evergreen concept. It's an exciting trend breakout. All trends, the expression is all trends begin with a breakout. So, wherever that trend may be, you can kind of usually spot it with some kind of a breakout. But again, where most people go wrong with it is they think that, this breakout, because this one worked beautifully, like this is the poster child of this is always going to work and you should always do that. When in reality, maybe that setup works 20% of the time, like you said, and it goes really crazy awesome. And most of the time it does this, or it does this, or it does this, or it does this. And you are looking and waiting patiently for the one example where it moves higher. And that is why, people comment all the time. I have these videos that are like, how much can you make per month as a trader in percentage form? And people get so angry and they're like, it should be 10, 20, 50% per month. Because, if you're a really good trader, and it's like, it doesn't matter how good of a good trader does what we just talked about. They keep showing up to a trade that seems not to be working, but they know because they've back tested enough that sometimes it does work and it works enough to pay off the losses.
And if the volatility is at all-time lows, no one is making money.
Yeah.
Like you can't invent volatility. It has to happen. The moves have to happen. If they don't happen, there's no opportunity. That's just, if the markets are extremely efficient, then we just can't make any profits.
Yeah. Speaking of volatility, here's the VIX down to 14.55 today. Like I look at this and I kind of get bored. Like when this is happening, you have the move index is another one that you can look at for bonds, and you can see bond. By the way, this a lot of times is also a good one for currencies. The move index, very, very low. The VIX, very, very low. So you have the situation where markets are quiet. Doesn't mean they have to stay quiet. They could lively up really quick. But in that case, you want to also, I think there's also, I was listening to, I sent that video in the group chat, Larry Williams talking about how he really only right now, he mentioned and this felt very familiar. He's like, the only thing right now that I really am liking is gold on, and he's a very similar trader to ourselves. He's a momentum, trend follower type guy.
Yep.
And him pointing that out, I thought was really interesting, because there are just times where charts go quiet, they go sideways, and we have to not mess it up by waiting patiently for the right moves to start.
Exactly. And I can see that Alan has joined, so I think his segment is starting now. So I'm gonna pass the show to Alan. Thank you, Nick, very much for joining and doing this joint segment. I think it was super fun, and we talked about some really key stuff. If you guys saw this, just think about it, because it works. Don't focus on just one thing. Don't focus on just gold. Expand, and you'll make a lot more percentage. So
yep.
Yeah.
Love it. Yep, we'll pass the show over to Alan. Mark, if you want to do all the backside thing, I'll get out of here as well. But yeah, great talking to you. And up next, you guys have Alan Perez. Stay tuned.
Okay, I'll set things up.
Okay.
See you.
See ya.
Before we start our segment, guys, good morning, good evening, good afternoon. Let me go ahead and put this quick break for you guys so you can go ahead and see it. I'll be back in about 1 minute and 10 seconds, so stay tuned.
Hey traders, don't go anywhere. The show will be right back. I just wanted to tell you about today's sponsor, that is ACAP. ACAP is currently offering traders outside of the United States a huge welcome bonus when you create a new account using the link that is being dropped in the live stream chat or in the description down below. When you create a new account using our referral link, they'll give you a 20% deposit bonus to your new trading account. For traders who prefer trading on a brokerage rather than a prop firm, this is a great option in which you get a nice little boost to your new trading account. But I do also want to disclaim that terms and conditions do apply to this, so please see the full details using the link that's just been dropped in the live stream chat. Alternatively, you can scan the QR code that you see on your screen right now if you're watching from a desktop or a TV. ACAP has several regulations worldwide and is a very well-known CFD and Forex brokerage. So check out ACAP if you're interested in switching over and taking advantage of this really generous welcome bonus they are offering our subscribers now. As always with any sponsor, please do your due diligence to make sure that this is in fact the right brokerage for you and your trading style, as well as your own risk tolerances. Thanks to ACAP for sponsoring today's content. Now back to the show.
Good morning, good evening, good afternoon, everyone. Guys, if you guys are looking for a new brokerage and you are not in the US, go ahead and check out ACAP. They are offering a 20% welcome bonus for a limited time. So go ahead and drop the link that was dropped in the chat there. Just go ahead and find it, click it, and go ahead and get 20% on your money, man. That's a pretty good return, I would say. If you can get 20%, that's a pretty good deal, okay? So go ahead and check them out. Good morning to you guys all. Ball out. I got my coffee. I got my flip-flop beans today. We are ready to go. We have another round of inflation data, PPI. So that's going to be very, very, very good. We'll go ahead and see what happens. The consensus is that it's going to tick lower from previous. So previous was 5.5. We're looking at 4.9, give or take. And then core PPI is looking to be lower at 4.1% versus 4.7 previous. So we'll go ahead and see. One thing I can see here is it seems like my camera is a little bit elevated. Let me fix this real quick, guys. Can you guys hear me okay? Go ahead and give me a confirmation in the chat. I think you should be able to hear me. AI Allen back at it again. Yep, AI Allen is back at it once again. Mic is gone. Should not be. It should be on. Should be rolling. Mic is off. No, I don't think so. It's back. It's back. Yes, thank you, my friend. I love your name, Huang Ray Coffee. Well, Huang Ray, if you are new to the stream, one thing about us here is that we absolutely love our coffee. So loud and clear, man. All right, cool. Let's see where are we going. We're going. Let me read the comments here for you guys. You got it. There's a lot flowing. I have to catch up. Okay, thoughts on pound kiwi. We'll go over pound kiwi. AI Allen is back at it again. Yes, AI Allen is back at it again. Someone tell me if it's a buy on gold. Well, how about this? How about we stick around, Cole? Stick around here for a little bit, and after the PPI release, maybe we won't tell you to buy gold straight up, but you can have some more clarity on the gold situation, and maybe you can make the conscious decision yourself to see if gold is worthwhile. But I will say this: gold right now fundamentally is looking very, very good. If you go to the Edge Finder here, this is the screener that we all use. It helps you trade with the fundamentals, the sentiment, and the technicals all in one. It gives you a very bullish or bearish reading. You can see here that gold fundamentally is very well supported. You saw some of that too being instilled yesterday with the CPI report. Not coming in cooler than expected, but it did go lower than the previous number. So if you were to get PPI come in, lower than previous, that would be very good for the gold story. And likely you see a continuation to the upside in gold. But stick around because the number comes out at 7:30 a.m. my time. So you don't want to miss it. You don't want to miss it. All right, let's see. Gold buy or sell. I think I covered that one. Dollar Swiss looks good, man. Again, I think that a lot of these currency pairs, when it comes to dollar pairs like the majors, I think the last thing we need is really PPI, right? Because after this, it's smooth sailing. There's really nothing else on the calendar that I could think of. Let's see what's going on for the rest of this week. So PPI is today. After that, it's nothing. It's retail sales. And then what's going on next week? Is next week pretty quiet? I would think so. So next week you have meeting minutes, and that's about it. So after today, it's pretty much smooth sailing. So PPI is going to be very, very big. Very big. You also have oil down today, too. You have oil down, 1.4%, which is good. It seems like it's just going to continue trading in this range that we've been seeing for a long time. So nothing new there. So yeah. Prizard. Alan, how dare you suggest people think for themselves? Well, I guess that's my fault, right? I guess that's my fault. Yeah, guys, let's think for ourselves here. Let's make the conscious decision to trade the way we should trade based on your own. Because what happens if A1 Trading live stream ends, right? I'm not saying that it will or that I want it to, but let's say not just A1 Trading, but let's say you find a content source that you rely on for your signals trading, okay? And let's say they vanish. Well, what do you do, right? If trading is your business, that's where you make your income or whatever, if that's gone, then what do, right? Do you find something else or what? Like, it's like the old saying, do you want to fish or do you want to learn to fish? You want to be resilient no matter what happens and being able to survive on your own. Alan, what if data is neutral like yesterday? Well, yesterday's data was neutral because it didn't miss or beat expectations, but nonetheless, it was it was lower than the previous number. So let me show you. Let's go to CPI data on the Edge Finder, so I can just show you. Let's go to economic data, inflation, CPI. We're gonna go ahead and toggle for the US. So to your point, it wasn't a beat or miss on expectations. It came in right on the dot, what analysts expected. Nonetheless, though, it did trend lower, right? So that is a development, I would say, in the inflation story. So with PPI, same situation. If it comes in flat, right? If it comes in right on the dot, PPI year over year is coming in at 4.9. So if it comes out at 4.9, yes, didn't move the needle, didn't miss any expectations or beat expectations, but it is way lower than 5.5, right? So it's trending in the right direction. So we'll look at that. Now, if you beat or miss expectations, that's only adding more fuel to the trade, right? So like if it's 4.9, if it comes out at 4.7, not only did you come in lower than the previous number, but you also beat expectations in a good way, right? So that's what we'll be looking for here on PPI data. You guys are so funny, man. No risk, no Ferrari. Can't imagine a day without AI Allen. Man, you guys are making me happy today. Let's see. We shall create an AI OpenClaw agent who keeps the legacy running. I see what you mean. We shall create Nick GPT, an AI OpenClaw agent who keeps the legacy running. Hey man, you know what? That may not be a bad idea. Okay, it may not be a bad idea. One day we're all gonna have neural links in our heads, and we're just gonna be flowing. You know, we'll be here forever. What do you guys think? Are you guys looking to get Neuralink? Is that something on the horizon for you guys, or no? Me personally, maybe not the first round, but you know, it's kind of like adopting the internet. You don't want to be the one guy without internet in a world full of internet. So I don't know. It's kind of weird. Kind of weird to think about. Yoshi says no way. Sluggy says so excited to get Neuralink. Huh. Adonis says no. Yeah, I don't know, man. I don't know. It's a tough question. No risk, no Ferragamos. Ball out, you like Ferragamo, man. I've noticed that about you. Don't think I've not been paying attention. I noticed that you like brand Ferragamo. But guys, we are deviating, and I'm starting to realize this. This guy says, what does this say? Hey, AI Allen, can you run your servers and GPU to analyze Nasdaq before the PPI did? You know what? You asked me about the Nasdaq. I remember reading that comment. So let's go ahead and talk about Nasdaq, and that's how we're gonna go back into the right stream of things. Okay, so Nasdaq, what are we thinking here? You know, I think that's the kind of easy, not the easy trade. I'm not gonna say that. The path of least resistance right now with Nasdaq is probably a drift higher. Annoyingly, because of that, I wouldn't want to enter. Right? There's no kind of like pullback opportunity. There's also no like volatility to capture. It's kind of just slowly drifting higher. So I hate to say this. This is like the boring answer, but I think there's better opportunity elsewhere. Metals market's heating up. I kind of like oil too. Like if you were to get oil, which this could be a long shot, it could not, but depending on considering the environment that we're under, volatility happens very, very quick in oil. But if you find yourself at 68 or somewhere around here, I might be open to just buying a position with a wide stop and just try to capture like a 200-day moving average mean reversion, or a up into the 84 mark. Who knows? But I'm kind of liking the idea of just like a buy the extreme dip on oil or extreme relative dip on oil and just playing the upside game. When it comes to Nasdaq, though, I mean, this is a hard chart to trade. I think you would be a really good position if you somehow realize that you should have bought right here, and you did. But if you didn't, like many of us, like me personally, I was waiting for a 200-day moving average, which we never got there. We were close, and I thought we were going to get it, because if you just look at these daily candles and you take away this big green candle here, right? Let's just put ourselves in the end. Let's go back in time a little bit. When I was looking at this chart here, this red candle, I was like, oh man, we are so close to hitting that 200-day. And then all of a sudden it didn't happen. So then I was like, okay, cool. And then we found our way up into here, right? Like right over here where you're testing the trend line. Like, okay, maybe it rejects the trend line and it flips bearish. But we didn't. And because we didn't, we broke. Now you're like at a price level where like the risk to reward doesn't make sense, right? Because if you enter a market here, your stop needs to be either here or whoever. But nonetheless, if you're trying to target recent all-time highs, your risk to reward is negative. Doesn't really make a lot of sense. So that's kind of my dilemma with Nasdaq. So I'm just gonna be very patient with it, let it do its thing. If it gives me something, cool. If not, then so be it. One thing I am looking for potentially is if you were to get like a revisit of this trend line here, or just a revisit of this level of support, maybe taken to the upside with like a very short stop, small size, just kind of like get your feet wet a little bit. But with Nasdaq, that's just kind of the idea there. But like I said, there's other things in play right now. Gold, the metals market is heating up, so that's kind of what I'm watching. Really, that's kind of my main focus. I'm flip-flopping, as you guys say. I'm flip-flopping around, so I'm waiting for the next thing. and gold seems to be the thing right now. So I'm just going to be staying consistent with that. Currencies, I love currencies. You guys know that's my bread and butter. Bread and butter. I love currencies a lot, but it is also not really doing much. Like, for example, I'm in this euro dollar trade. It's been like hanging out here doing a whole lot of nothing, right? So it's at break even, so it doesn't hurt me or anything, but it is frustrating to just see this thing kind of hang out like this, right? There's really no volatility. The only volatility I can think of in FX is probably going to be the Japanese yen, but then you all know that it's so hard to predict, right? So yeah, that's the thing. All right, let's see what you guys are thinking in the comments here. Are you trading gold? Yes, I am trading gold. This is a gold position that I have right here. I have trailed my stops, and we actually almost got taken out here. Last night, early morning, it retraced a little bit here. So basically, the way I'm approaching this trade here is I'm just trailing behind structure, right? So you have these leg hires, these pullbacks. If support holds, you trail right behind. Same thing. You had breakout, tested here, support hold, trail stops along the way here. You're starting to see a little bit of choppiness here, but again, nonetheless, I am seeing that this is a potential support level. So my stop loss is just right there, trailing right behind it. And I'll keep riding this trade for as long as it goes. But I am very open-minded, and I would be very willing to get taken out of the trade. That way I can see lower prices and I can just get into the trade once again. And essentially, you can think of it of like double dipping or whatever you want to call it, securing some profits and then getting right back into the trade. Yeah, man, currencies have been slow. He says you hate Kiwi right now. Yeah, a lot of the majors are kind of just wonky, man. Like Kiwi too, right? So like euro dollar, my kind of frustration with it has just been chopping around like this, right? Sideways. Kiwi as well has been flirting with that 200-day moving average. Really nothing going on with it. And two, the other thing that makes it tricky, it makes a lot of sense. A lot of central banks right now are in the same pickle as us. Do you hike rates? Do you cut rates? Are you data dependent? How quick are you to move if you see the right data points? Like, it's not just the US that's having the problem with the global supply shock. It's everywhere across the globe. And so you're having like a lot of, as we call it, flip-flopping with the central banks. And that's why you're seeing like these kind of stale movements in FX, is because for FX, for you to see a really, really strong move, you need to have two like polarizing opposites. You need to have like a super hawkish central bank against a super dovish central bank, right? That's where you get these clean one directional trend moves like you would in gold or the Nasdaq. But right now, everyone's fighting the same battle. And so because of that, you're getting mixed signals. You're not seeing polar opposites. You're seeing a lot of choppiness. So that's kind of how I would describe FX right now. And again, with the only exception being Japanese yen, where you're seeing volatility, you're seeing like these clean, or not clean moves, but big moves. But with that comes the uncertainty. When there's intervention, there's really no structure to the chart. So it's a gamble. You probably want to reduce your size by a lot and then widen your stop loss. But yeah. Hey, Nick, how you doing?
Hey, Alan, keep going. I'm invading everyone's stream today. So
you're invading, man. It's all right, man. It's your stream.
Well, PPI to A, it's our stream. It's a community effort here.
PPI, man. I'm thinking it'll be pretty nice from a selfish perspective if we were to get something in line of expectations or lower to continue the gold rally. But I know you would like some kind of pullbacks. But does it change the story for you, Nick, at all? If you have a good CPI print yesterday, then you have a hot PPI print today, does it ruffle any feathers, or is it just one data set against a bigger data set that's in favor for maybe some dollar softness or maybe a less restrictive Fed? Does that make sense? Did I say that right?
Yeah, I think so. No, I think you bring up a good point. You know, if you have inflation come in today to sort of contradict. Well, let's think about this. Yesterday's CPI came in line with expectations. Technically, from a scoring perspective within our screener here, that goes neutral, right? So it came in line with expectations. That makes sense. If producer price index comes in higher or lower than expected, then it may actually have more of a decisive impact on the inflation category within Edgefinder for gold. For your case, I hope that we see cooler inflation and gold keeps ripping. I'm living through your trade, so I hope it keeps moving higher. But I do think that, even if you get higher than expected inflation today, let's visualize that here. Let's say that this comes in and it's a hot print that goes to bearish. That is still going to just send inflation into neutral camp, because we have now the 2-year yield working in our favor. That's a component, an entry, or a component here within the software. So what it does is it looks at the 2-year yield and it just says, hey, what's the trend looking like here? And the 2-year yield moving lower like this is generally perceived as a positive for gold. So that's how that scoring mechanism here is working. For listeners, I know that I explain this stuff often, but there's always newer people who are in the show, so I want to make sure that they are getting this concept. This is not a black box, secret algorithm. Edgefinder is intentionally trying to stay simple so that we kind of universalize, if that's a word, this data. So to answer your question, I think that even if inflation comes in hot, I'm still bullish gold today.
For sure, me too, because it's just one little miss over a pretty strong picture overall.
Yeah.
So yeah, I'm like I mentioned, I wouldn't feel any type of way if I got stopped out. It just gives me an opportunity to re-enter on any dips and kind of double dip a little bit and participate once more. Besides the metals, Nick, I was kind of ranting here on how FX is pretty stale, pretty boring. Nasdaq too, for example, they had questions on that. Also too, just kind of drifting higher a little bit, didn't really give any meaningful pullback. So like I wouldn't want my cost basis to be way up here if I'm entering on any fresh swing trades. Is there anything else you're watching, or are you kind of just attention on the metals?
I think right now, in terms of where I like the setup, it's going to have to stay with the metals. That's like the most obvious spot, but I'm totally with you. I made this point to Marco earlier, just to help you visualize for listeners who are hearing Alan say, currency volatility is low. One way that you can kind of study that is through the MOVE index. Now, this is specifically bond market options volatility. It's sort of the VIX for bond market, but bonds and currencies, they typically are very volatile either together or very not volatile together. So one way, if you are somebody who trades currencies, if you have watched the 2022 market, 2023 market, where you had, rate hikes, as you were explaining earlier, Alan, when you have divergence between central banks, drama builds up, you've got good movement. Right now, you've got kind of a sleepy currency market. And I think that, in the last few years, the streams have moved further away from currencies, not necessarily because I don't like trading currencies or you don't like trading currencies, but because we are sort of, we're a group of traders that hunt where volatility is at. If there's no volatility, it's really hard to make money. If you're trading something that doesn't move, you're just going to pay a lot of bid-ask spreads to the broker.
Mm-hmm. I'm with you too. Like my focus here, like reflecting on when I first got onto the stream was FX. That was my thing, right? And it's like if you stay with something that is not really too opportunistic, then it just makes no sense to continue that way. And that's why I'm kind of dabbling into the other things. And it's important that, thankfully, the tool that we have at our disposal, the Edgefinder, covers everything. So it's not like you have to marry a certain asset class. If there is a switch in attention or if there's opportunity elsewhere, it will let you know, and you just have to move towards that direction. But I'm kind of with you too. Like I'm having trouble there, unless like I'm not a stock trader myself, Nick. I'll be honest. I'm more of a long-term investor in that sense. But
yeah,
what about like the sectors or stuff like that you're looking at? I know you dabble into that, maybe some options too. Is there anything hot in the sectors? Are you still looking to buy the dip on like I think you like software, right? So is software still a buy the dip opportunity? Maybe the semis trade. What's going on that side of things?
Yeah, it's so in terms of where I'm at with sectors, I know Marco was talking a little bit about our new top sectors feature here within Stockbox. This is definitely, the thing is, I like chasing whatever is moving. If there's momentum, if I've got a solid moving chart, like you've got that wonderful gold trade going, like you've got momentum there, you've got a chart that's moving. And just to clarify, I still do trade currencies and I love trading currencies. And like when I got into trading 10 years ago, there's been times where currencies are like a really big part of my focus because they're moving. Like there's a lot of volatility when the yen is really making a move or the dollar's making a move. It's exciting. There's opportunity to make really great trending moves. But for me, it's like I just want to stay with whatever is currently actually moving and giving us some opportunities. So here's like a look at some sectors here that are getting generally either strong trends, valuation models. We do have some null values because we just added a bunch of symbols and they are still being worked on here. So we bear with us. We have basic materials that got added, transportation, biotech, retail, regional banking, software. These things on a valuation basis. What we do is we take the 3-year average valuation of the companies within these ETFs, and we look at it and say, is currently the valuation under or above or below, the 3-year average? That's a sort of our valuation gauge. Then we have the impact of underlying stuff. So economic growth recently has been weaker than expected. Each sector gets kind of a weighting on how impactful it is to that sector. So like, for example, weaker than expected growth is especially negative for financials, which are very tied to the underlying, the economy. If banks, if the economy is slowing, loans are not being processed as much, financial services can be a little bit more under pressure. So we've weighted this, for each thing too, like oil and gas or basic materials, like certain things are more impacted by inflation. Anyways, this is sort of my filter for that stuff. And what I'll do is I'll just look through this whole list and I'll say, all right, what's pulling back? I use a 20 and a 50-day moving average, nothing fancy here. I'm just looking for pullbacks. And if it pulls back, my checks have been like, this takes me 5 minutes a day. On the sector side, I am just looking for pullbacks into my moving averages or a level of support. And then I'm checking stock box to just ensure that the total score looks valid. I don't want to buy something that, just like Edge Finder is sort of our macro filter, stock box is my sort of valuation filter. So right now, to be honest, not a lot of stuff is pulling back. Stocks are kind of at their all-time highs. We'll see. We have just a couple minutes here going into the producer price index to see what that brings us. What about yourself, Alan? I mean, I know you've got the gold trade. Any other like pending setups that look attractive to you?
Not really.
Okay. Me either.
I have like even too, just looking at the DXY, like it's been kind of hanging out here. I think things could start to heat up on the currency front. Like, so I've been talking about this kind of dollar unwind trade where you have like the dollar inflation / safe haven trade that just, took us higher here. Obviously there was some kind of a top right here. And now you're starting to see what could be a continued like dollar unwind trade. I'm kind of looking at that 200-day moving average. If you lose that 200-day moving average, then maybe you're getting closer to the kind of war start area and maybe you can take some trades on that. But until you see something like that, this could very well be either DXY hangs out right here or you find some dip buyers right here. It really all depends too on like the Strait of Hormuz stuff, which that's unpredictable. So why would you put so much emphasis on something that's so unpredictable, right? Like it's unreliable. So that's kind of the only thing that I'm watching there for the currency side of things. With equities, like you mentioned, near the highs, there's really nothing you can do there. So I'm just basically sitting with the metal right now, which is working nicely. And again, even if I do get stopped out, I'm very open and willing to go ahead and just jump right back in on a pullback and just continue being active on the precious metals.
Yeah, I like it. And I think one area that I like right now too is actually, I do have a bit more of a bearish tilt on the US dollar. But like you, I've got kind of two spots that I'm watching on this. If I go to DXY, I do kind of like the breakdown in price. I think that if you were to get a little bit more of a rally up into this 100.5 level, what that would probably set up for me would be maybe some longs on euro dollar on a pullback here. So I'm watching this level here, this 1.1470, let's call it. This support area, if I draw some fibs from low to high, yeah, so right around, let's say 114.65, I'd be maybe interested in taking a long on euro there, looking for a continuation to the upside. I do also, because I have a little bit more of a bearish view on the dollar, I do have a little bit more of a bullish view on international equities. International equities tend to like a weaker dollar. And so if we do see, if dollar is in the process of kind of just frustrating the bulls again, right, where you've got this high point coming back in, we may very well maybe meander our way back down to the bottom end of this range. Wouldn't be surprised if it happened. Obviously that would set up more opportunities on the gold long side and maybe on the dollar short side for some currency pairs. So we've got the PPI number here. Alan, any movement?
We have core PPI came in hotter than expected, but year over year came in lower than expected at 4.7. The expectation was 4.9, and the previous number was 5.5. So that's a pretty good jump, I would say, in the cooling direction. And then jobless claims came in at 209K versus 202 expected. So let's see. What are the initial reactions that you're seeing? Let's see.
Dollars, really not a big movement here. We're not seeing too much. Gold is back and forth.
Yields too are just kind of where they were.
Yeah, seems like a pretty quiet response, to be honest.
I will say the PPI is still a meaningful, I would say, cooling print versus expectations in a good development from 5.5. So let's see what the net outcome is. Maybe you continue to see a kind of drift higher in gold, and then dollar just continues to soften up a little bit. But I actually do like what you mentioned there on euro dollar. A pullback in DXY up to here will look quite nice to go ahead and short it at a, you can call it relative premium. I like dollar Swiss too a lot, man. If you go to like a weekly time frame on like short dollar story, if you go here, the technicals, I like this level here. This is a very choppy chart. So as long as we stay within the range of here, so 0. We can call it 0.815, 0.8100, stay within here. If you can find some kind of a breakdown in technicals, then you can target maybe 0.8, the 200, or even beyond that. But that's only if you stay confined within this range. If you start to see a breakout here, then again, the range starts to open up and you kind of start looking at 0.84. But as far as from like another opportunity in FX going short the dollar, that one's a contender for me.
Yeah. No, it's a little quiet response overall, but I do like your setups there. Generally leaning a little bit more bearish on dollar here. If you do get some rallies in the dollar, I also would probably take a stab at some dollar shorts up in this area. Also, like I said, I like the gold and silver longs. Silver, I may take a stab sooner because it is, the moves can be a little quicker on silver, both up and down. So I am watching silver on a pullback. If we could get something like a retracement into the 38.2 to 50% zone here on the daily, that might be an interesting where I may take a stab, but we'll see how it goes. Alan, thanks for the time today, as always. And again, I invaded everyone's stream, so I apologize for taking up some of your time, but hopefully the viewers enjoyed our dual commentary.
No worries, man. Be back soon. Have a good one. See ya.
All right. Thanks, man. See ya. Guys, up next, we're going to bring in Chris Pulver to the conversation, but don't go anywhere. We're going to play a quick break here before we do so, and then we'll have Chris on the line with me to go into some more markets. Stay tuned. If you're looking to get funded and want to save big on prop firms, check out our website, A1Trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways.
For example, every Monday, we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
All right, and we are back with my friend Chris Pulver. Hey, Chris, how you doing, man?
What's up, man? Happy Thursday.
Happy Thursday. Chris, we are fighting a volatility crash that we haven't seen in a while. The VIX is the lowest that it's been since December of 2025. We have charts are going mind-numbingly nowhere. Is this something that we should get used to? You think we have more room for the VIX to keep going? What do you think?
I think this is somehow an intentional volatility suppression that's going to eventually break out. The problem is when and how. What got us here was that 2-day face rip on Monday, Tuesday last week. So what you see on my screen here is this is after we got into that crazy 2-day run that was, what was seen in hindsight was, it was a low liquid run. Okay. But it still went a ridiculous amount to all-time highs. Here we are. Let's see, Wednesday to Thursday. So this is now 6 trading days of absolute nowheresville. Key levels here, support at 77, all-time highs at 77.94, and just an absolute chop fest around 77.70 and like 77.20. Even today's PPI reaction, which numbers look pretty good. I mean, we were making decent strides lower than expected, which is I think it's a better print than what we saw with CPI, which is, it's exactly as forecasted. Oh, wow. Our economists are so good. But today actually showed like a better than expected move. But I don't know if there's enough to drive this price, dude. I mean, this VIX at low points, it does make me want to get long the VIX going into like September, October, just for if it's cheap enough. Like,
yeah,
I don't know. Do we have a flare up to 20 again? And maybe it's intentional. Maybe it's all like just suppress. We're flooding the treasuries. We've got BOJ plus treasury intervention. We're trying to keep bond yields at bay. I don't know if we can do it, Nick, without having something crack or break, within the next like 30 to 60 days. I'm super cautious, dude. This is a perfect time of season to have like the market kind of complacently thinking like, oh, this is pretty good. I mean, August, no big deal, no drama. There's no Fed. There's no Fed in August. Now the probability of a rate hike is a coin flip, and it's getting less and less by the day. I don't know. What are your thoughts on the Fed? Are we just going to see like a just continuation, like another pause? They're not going to cut, but just pausing forever.
Yeah, I mean, I think it does feel like, and guys, let me know if my volume is okay, and we can maybe adjust it on the backside. But somebody said chat or volumes are a little off. Just help us out on the volume if it's okay or not. Anyways, yeah, to answer your question, I mean, it feels like there is a lot of room for the VIX to get upset about something. You have many different possible catalysts in front of you, and it really only takes when you have volatility like super low, you really only have any of the following things to get the VIX to flare up. Like if you have midterm elections cause uncertainty, or there's any surprises there, if you have tariff stuff come back full swing in any way, if you have the Iran-US stuff flare up in any way. I think that right now what you're also seeing is the cratering lower this week, especially in the VIX, is obviously the CPI and PPI causing no upset, turmoil for markets. So,
right.
It does feel like also in the short term, you're like, okay, there's nothing pressing on the headline right now. So that's why the VIX is, crashing lower. But if you can think about it, you're like, okay, well, there's many possibilities for things to flare up. I think that the other side of that is like, it depends what type of trader or investor you are. If you're like fully invested, I would look at this personally, not financial advice. I'd probably buy some protection. If I was just sitting in a full, portfolio of stocks.
Yep.
When you get really low volatility like this, I start getting a little bit like, okay, things are too quiet. You know what I mean?
Yep. I may do a couple ways. So I get long the VIX on occasion. It's a very, very difficult trade because we might see the VIX like go from 14 to 20 and there's your volatility flare up. That's not a profitable trade. It's an okay trade. You might sliver out a couple $100 a contract, but you know the long VIX for me is like, well, if I'm long at 14, do we have a VIX flare up to 30 or 40 or 50? That's when you make a lot of money on a trade like that. I don't think we get that VIX. If we do, like, something is way off. At the same time, we could have a VIX from 14 to 20 or 14, let's say, to 25 or 30. The futures market could have a crazy move like we saw back in summer 2024. So maybe one of the better plays for me is buying like an MES put or an MNQ put and just throwing it out there at like a 10% correction in the market. It's way out of the money. It's maybe going to cost me $300 to $500, and that could turn into like a 3x, 5x, 10x trade. And that's enough of a hedge to offset, maybe if the market has a flare up in volatility, but doesn't necessarily have like a huge dip in the indexes. Thoughts on where we are technically for, just look at postured SPX, which I'm sure a lot of people are looking at this like, I mean, it looks like a bull flag to me. I don't trust the inefficiency that we got there with. So, I mean, a pullback into, 7,600, I think would make some sense. Maybe a pullback into the same lows at 73. It's like, I don't know why we'd unravel it. That would be a little concerning that maybe it's a topping pattern in the works. But I still think, as you and I've talked about, the risk is to the upside. It's still the upside. Like this blow off top is like, well, we just kind of started it. We just postured it and it just continues to climb,
Yeah. And I think, the risk to the upside concept makes sense to me too, because if you get, some kind of feverish bullishness, like I think you do have that, but you don't have it in like valuations. Like if you saw valuations go insane, like we've had an earnings driven rally here.
That's very correct. Yeah.
And so that's great. But like if you get a valuation based rally on top of the strong earnings, you could see some stupidly strong moves to the upside. Like it.
Yep.
And actually, I was listening to a lot of the analyst community is now targeting 82 to 8,400 by end of year, thinking that you have, what is that? That's let's see,
that like situational awareness, like tech AI bottom is in, right?
Yeah, there's like a lot of analyst community is like 5 to 10% higher for the rest of the year. And to be honest, I don't think that that's outrageous. Like I think that if you were to get that type of move, I think you're probably going to get pullbacks and choppiness along the way. I tend to agree with you that I think we have not had the average. I think the average drawdown in a year is like 14%. That's like, generally what we see. This year, have we had that for S&P 500? No, we've had
less than 10.
Less than 10. And then over here we had, 5. So it depends your time frame horizon, or it depends your style. But for me personally, I can't really justify buying a bunch of stocks and investing up here.
Right.
And I know that, we've been saying that for a while in terms of like getting good value on this thing, but you have to stay patient. You can't just, buy highs. And for me personally, at least, that's not how I like to approach it.
Agree. So my thoughts on, this whole year I've been just kind of selling premium, letting these expirations roll off every couple of months or so. I've stacked in a lot based on seasonality. I had a lot of expirations in April and May and June, July, August 21st, I think is our OPEX. Then I'm skipping like September, October, and I've got a lot of like November, December, January stacked in as well. My thoughts on going out to like December and January for expirations and selling more premium on SPY, QQQ, DIA, IWM, other indexes as well. My thought is to stay at the yearly level. So if you look at a 12-month candle, I believe the S&P is at 6,800. And so, and again, that's not a low, but do I think that we stay above 6,800 by the end of the year? This candle started at 6,878. Do I think we can stay above 6,870 by the end of the year? I think if Trump wants to be president or stay with some type of majority power, he better hope that this market's going to be positive for the year, or else he has. I mean, his chances of truly having a third term, I think, are slim. But at this point, that guy can pretty much say and do whatever he wants and somehow get his way, which is it's baffling. But we're at 68, 68.78. for the year, it's like, well, we just maintain a positive year. That's probably where I'll have some premium stacked up. If I want to go all the way down to the lows we had in March, I can stack up premium around 6,300. Which one is safer? The 6,300. Which one do I think is still a winner? Probably 6,800. Because if we go, Nick, if we go to 8,000 plus and we're at 8,100, 8,200, 6,800 is way below that. But I don't want to be too far out timeline wise, because let's say we hit 8,000 or 8,100, and then our rollover is the average pullback, like you said, 14, 15%. That takes a lot of that away. So if we're at 8,000 and we pull back 15%, we're testing 67 and change, right?
Yeah.
So I just want to be careful. Like, how far out am I going? Do we hit 8,000 plus, and then what's your thought on the market? Like limping into the end of the year. So we get through midterm elections, we get a boost into midterm elections, or right after the midterms, we're up to 8,000 plus, and it just like starts to roll over and limp in, where it's like, are we not going to have all-time highs by the end of the year? Right? It's like if we drop, like, let's say 5+% coming off of an all-time high.
Yeah, I mean, I think as we go into the end of the year, I do think like my path of least resistance is higher for the end of the year. But I don't see personally like a 15%, blowout runner into the end of the year. I don't really see that in terms of where do I see a pullback. If we do pull back, I also kind of agree with you in the sense that like 6,800, somewhere around there, I would be pretty surprised to see the S&P below that point.
Right.
That would be really, really shocking to me, because again, I think that there's a lot of dip buyers in this market, around that 7,000 level, 7,300, 7,250. Like, I think you're going to have a lot of people who have been on the sidelines waiting for dips and probably ready to deploy if you get it. This market has persistently rewarded every dip that gets, sold. So, or gets bought. So I generally think that you have more, I think maybe the path of least resistance for me is, I think we go sideways or pull back. And I think we continue to sort of slowly edge out a higher move for the rest of the year. I would be shocked to see a much larger decline than that. In my personal opinion, Chris, I actually think the better risk reward here right now is in the precious metals. I know we've talked about that a lot. I think that, I'll go out and say, I think like if you're looking at markets here versus gold versus stocks, I generally prefer precious metals right now. I think you have uncertainty about midterm elections. You have the overhang of the Iran war, if that ends. If you have, the Fed ultimately coming in a little bit more dovish than people had feared, like there's a lot of sort of like pseudo VIX plays here on the gold market as well, especially with the, we're still well off the highs. Now, I'm not necessarily thinking like we have by end of year all-time highs on gold, but I do think that you have plenty of room for this thing to climb back, to crawl back for the next 12 months. And so I'm a dip buyer on gold right now, much more than I am on stocks at these levels.
I agree. Since we've been able to talk through this entire like pullback in gold and silver and talk through this accumulation, even if it's not like crystal clear upside, even if we just spend time bottoming out and building like a base, I think the upside potential on both gold and silver to me look way more attractive to see all-time highs 20% higher than it is to be buying all-time highs on these indexes. And again, not that I don't want the markets to go higher, but what I'm going to do is just sell premium and just see if time will roll off and pay me, versus I've got to be directional right now and take this, this overcommitment at the top. So 7,000, I actually think 7,000 could be like great premium especially if we're going to jump up to 8,000 or so. What I may do at 7,000 is a defined risk trade. What I might do at the 6,800 or the 6,300 is an undefined risk, meaning I can do like cash secured puts or
take assignment,
ratio spread. Yeah, like I'm willing to own the shares and kind of pick that as my ownership level. But like a 7,000 might look better for a defined risk trade where I can maybe grab like I'll risk, let's say, $400 to make $200 and do that, 10 contracts or something. Just try to make it where if I'm wrong, I'm wrong. But like, do I think 7,000 is a level we can hold above, or 6,800 we can hold above? I think we can hang out and be above those levels by the end of the year. But probably selling premium back around that like March low at 6,300. I think we're like I don't know, not worst case necessarily, but you know, I know my charts look terrible, but I can see through all this crap. You guys can't. I can. Okay. But if we have something like this where we do, and I don't know, this is like, why would we test this level? I have no idea. Like, Nick, we have been talking about all these things that could potentially, dude, nothing has derailed these higher lows for right now. Unless, I mean, and I think I shared with you in Discord, it's like, did literally everything in the circular financing world just continue to get bigger? Like, to my knowledge, Jensen Huang and NVIDIA, they brought in Apollo Management, BlackRock, Goldman Sachs, some of the biggest pockets in the world. And it's like, finance this AI for us. And it's like, if one pocket of financing is like failing, or one point, like one part of it is struggling, there is a whole slew of deep pockets and big companies with moats, with lots of cash, that can still kind of pick up the slack. So it is like, it just seems like something that is set up incredibly well insulated. And I'm not saying that it can't be a CapEx bubble. I'm not saying that it can't be an issue down the road, but I feel like right now it's just not enough to crater this market. The bond market might be enough if yields keep going, but with CPI and PPI declining, it's like, I want to see what the bond yields do. I just don't think the Fed needs to start cutting. I think that might be the biggest policy mistake, is if the Fed cuts with no action, and not that a hike needs to, it's a weird freaking environment, dude. I mean, the Fed doing nothing is probably fine. The Fed hiking to then cut is, I think, a lot of unnecessary volatility. The Fed just cutting, and maybe they kick it down where it's like they do the task force stuff. Warsh just kind of steps in, gives as little guidance as he can. And then it's like, wait for 2027, the Fed starts to cut. I mean, Nick, we could be at 8,000 plus, and then we still have a blow off top potential, you know?
Yeah.
And you're right. You said it like spot on, when it's like, this is an earnings driven rally versus a valuations driven rally. And that is a big difference, because valuations have actually gotten cheaper. Believe it or not, at all-time highs, valuations have gotten cheaper because of this record dispersion we've seen this year, which I think is a good thing.
Yeah, no, it's one of those things. Like, I think if you are looking at this chart and you're thinking, like, there is a very common trap in trading and investing, which is, you know, that concept of like, how do we get that 6,000 retest, what that ginormous crash? Like, you can drive yourself insane trying to pick out your reasoning for why you think that might happen or might be around the corner. And everybody who's traded for less than a year or 2 years has thought they're the big shot genius who's like, hey, you know, markets are going to have this 30% correction and I'm going to pick up the pieces. And it's like, you might be right, but like the vast majority of the time you're going to be wrong. And it's a real tough way to make money, to be bearish. Instead, I think being prudent, managing your risk, trailing stops, reducing size, whatever that means to you for managing risk, when you do feel like markets are getting a little expensive, is a far better approach than trying to short a market that you think is, you know, going to have some downside. Like, if you think the market's going to have a downside, we've talked about this many times. There are so many other ways. It's like you pointed out, if we get a run up to 8,000, and then we get some kind of, you know, at this point you say, oh my gosh, this market is way too overcooked. Like, we're gonna rally back down, or we're gonna plummet back down. You might be right, but you might see this, then that. Right. So that's why, again, it's just so hard to be a bear, because markets generally have capital flowing into them. Markets tend to go up over the longer term. So I think if you are bearish or cautious, there are far better ways, in my personal opinion, that don't require you to be perfectly spot on timing to be nimble in a market like that. So for me, one of the reasons, or one of the easiest solutions, nothing is easy, but in my opinion, my approach to markets, gold allows me to play something else that I think has more potential upside. I also think that the macro environment is a little more challenging than stocks would let you believe. Like, economic growth has been missing on most of our metrics here, like consumer confidence, services PMIs, GDP growth. These things all missed expectations. Meanwhile, the non-farm payroll had 2 back-to-back misses, a surprise of minus 108,000 jobs versus expectations. The ADP, like, there's reasons here to be a bit cautious, but I'm not going to short the stock market. Instead,
I like what this is showing me, where we're seeing a little bit of softness in the macro, that I think that makes gold look really attractive, especially when inflation, especially today and yesterday, like no red flags there. That's not going to cause the Fed, in my view, to hike interest rates dramatically.
Right.
So I look at that and I say, gold's macro looks good. The chart looks good. It's down significantly from the highs. I'm going to let gold or stocks do what they want. Hopefully they pull back. That would be great. But in the meantime, I'm focused on gold. Like, it's just the easier trade for my style of trading. And for each person in the audience, figure out what you do, find out what works for you. I'm a macro and momentum trader. So gold with this kind of uptick here is right up my alley. And it's going to keep me focused on something else other than staring at, stocks, which I think are a bit expensive, but also, could pull back, could go higher. I'm not really sure.
Yeah. Gold. I mean, gold is a great trade. I think gold, it would be an amazing surprise, would be gold right back to highs. Like,
yeah,
if we are talking gold by the end of the year at 5,500 or higher, that might be my favorite trade ever, because we had the ability to get out of a massive run and a huge bull market that did take years to build. But if we just have even if it's this, Nick, this posture of like, okay, gold had this incredible 3-4 year run and we have a big wave right here. Maybe it's this. Maybe gold is really not this bust out, go to 8,000. But even when we get to 5 or 6 and we pull back again, allow us to accumulate. And then this is a longer term base. And again, that's a maybe. But I would still take profit here and trail out. And if it comes back, I will accumulate all over again.
Yep.
Like this was a 4-year trend that you're asking this thing to go right back up to fresh all-time highs. It may not be that committed to just blowing out the top.
Yeah.
But I do think that from right now at this level, buying dips, if we start breaking, and I would be any pullback I can get, I'd be getting my hands on more gold or selling some options on it.
Yeah.
So
I think
it's a great trade.
It's one of those things I've been talking about it all morning with everybody on the show. And it's like, I just don't have right now. I don't have a lot of setups. And the one that is just the most obvious for my style is gold pullbacks. And so that's really where my focus is at, especially when, again, we started the show here. VIX is down in the gutter here. Currency volatility is also down significantly. We can see the MOVE index for bonds, cross-examined for currencies as well. It's going to be pretty similar. Like, you just have a really quiet environment. And I don't if the VIX keeps plummeting lower, I may take a stab at some VIX longs, in the form of calls a couple months out. But really, that would just be more of a small potential high risk reward type setup. But for me, gold, silver pullbacks make the most sense. I don't really have a directional bias that's strong on things like oil. Stocks, we've already talked about. Look a little bit extended here, would like some pullbacks, but not going to hold my breath on it. And with gold, all I'm doing right now is I am fingers crossed looking for some kind of a retracement. And then I'd probably take some longs. Now, when I say that, I'm not saying, like, for listeners, please understand, just because a trade is obvious or looks good or is right up my alley for a setup doesn't mean I know with certainty that gold is going to go straight up to all-time highs. We never know with certainty what's going to happen in markets. When I say I'm looking for longs, I'm looking for pullbacks. I'll take a small controlled risk, and I'm looking for a potential runner that may or may not show up, but I like the setup. I think the setup is worth the risk to losing some money if I'm wrong.
Yeah. Do you like silver and gold like equally, or are you going to focus on one more than the other?
I think I like both, but I like maybe gold a little bit more right now.
Okay. All right.
What about you?
You have options in gold miners. Do you have GDX still?
I did. I took profits on those.
Did you?
I closed out of them. So yeah, just waiting for retracements.
Okay. I did. My GDX trades are down into the low 60s. I have lots and lots of stacked up options on like the low 300s on GLD. Tons of options on SLV, which at this point are looking pretty good because they're all like in the low 40s. So, there should be some really good option profits. And then I just started to buy some more shares. I think honestly, gold to me does look a little bit better from the technical side. If I go to the spot price on silver, I think silver has like the extra use case of this is not just a poor man's gold, but also there's utility to silver with AI build out. Aluminum is a good play as well. Alcoa has been a great stock for me this year. AA is the ticker. It's been very volatile, but I took that thing. I'll go back to silver in just a moment. Oops, not AAA. So I rode Alcoa from like 25 up to 75 and then trailed out.
Nice.
I'm back in around the 50 handle again. So we came down to like 42. I thought we'd have a bit more of a support around like this $48 to $50 zone. But if this is a spot where we can catch some support on Alcoa or aluminum, this is another one that's kind of in the whole AI narrative. It's one of the things that's needed. But do we get back to the same high at 85? We have recent highs back in. This is 2022. Aluminum hit over $100, or I'm sorry, this is Alcoa hit over $100. So decent trade there. But silver, from a technical side, I mean, it looks okay, but we're clustered with all these moving averages. Silver looks a lot better to me, Nick, if we are up here in open space. Then I think buying the dip looks a little more attractive. Gold has kind of already made that run. I think gold, I mean, sure, we may see like resistance. Maybe this is resistance, but to me, this doesn't take out the lows. If it does take out the lows, to me, that's a divergent bottom. I'm looking for a bullish pattern to still emerge. So
yeah.
Like we said this many times, all roads point to bullish gold, in my opinion.
I agree. I think it's just one of the better setups out there. Again, a setup never guarantees we know exactly how it's going to play out, but a setup is a setup where you take the trade not because you know the outcome of that particular one, but because that setup, the risk reward profile makes sense. You're going to lose on some of those, you're going to win on some of those. And I reiterate that point over and over to listeners, because thinking in probabilities is really what will save you in trading. Because if you don't think in probabilities, if you think in certainties, you're going to risk inappropriately. You're going to make some dumb decisions. Yep. And so, I like gold. Chris likes gold. Doesn't mean that we're going to bet the whole account on a gold movement, right? Correct. So just context for clarity there. Guys, we are out of time here. We've got our next show host starting, and Chris, you've got another show, I believe, to run too. So thanks for coming on, man, as always, and enjoyed the conversation, and we'll see you back on the next one.
All right, sounds good. See ya.
Sounds good, man. See ya. Guys, up next, we have let's see who we got. Miko Audu is taking over the show here in just a bit. Before we throw the show over his way, if you guys want to try out Edge Finder, which is, I mentioned it a lot here on the show in terms of liking gold because of specifically the macro environment. A lot of traders want to implement some level of macro fundamentals into their trading, but lack the tools in order to do so. If you want to try it out, check out the QR code here below, or we will drop the link in the live stream chat to where you can sign up for a trial. We now offer a free trial as well. You can get the free trial on it. You can explore the longer term trial options as well. And we also offer a free course with access to the trial information. So if you are interested in taking your macro fundamentals to the next level, get the right tools to do so. And the right tools are, again, what we specialize in building for traders around the world. We have thousands of people using our stuff here to keep an eye on what is going on the macro fundamentals front so that you can align with the bigger picture trends out there. Up next, Miko Audu taking a look at some technical trade setups happening now. Stay tuned. He'll be on right after this quick break.
Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, PropShop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring PropShop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing PropShop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to PropShop Trader for sponsoring today's live stream. Now back to the show.
Okay, what's up, people? Hope everyone is doing well. Glad to be back on the show. As always, we'll go through a bunch of different markets. I will share what I'm looking at, what I'm interested in, intraday and swing. If you guys do have any particular markets you're interested in, let me know. Stick it in the chat. More than happy to take a look. And different time frames as well. Do not be shy. But I have been traveling over the past kind of week or so. I haven't really been active in the market since the start of the month. So yeah, I've just kind of been keeping an eye on a few markets, especially from a swing perspective. Only kind of today/yesterday have I been looking at intraday price action. I had some shorts on Euro USD this morning. Well, I say this morning, actually about half an hour ago, which didn't play out. I had some shorts on the 30-minute time frame. I was short from here. Had some stops above the high, and we had a bit of news release, and that did not go my way, and price did take me out. I'm still pretty interested in downside for Euro USD. I'm not convinced with the buyers, so I am keeping a very close eye with Euro, with USD strength coming into the market. We have held support, so it was a more of aggressive trade. I was aware of that before jumping into the position because we were holding this level, especially with that wick this morning in the 4-hour. But I am expecting a bit more downside for Euro USD. Now, maybe long term, we do trend higher. I am not too sure about that, of course. I'm not really too concerned about the long term, but I'm looking at price, especially since the Fed a couple of weeks back, we had a lot of strength. Now, price is just basically coming to supply resistance to our left. And we've become very corrective. You can see you had a lot of strength, and suddenly we're seeing a mixture of candles, bearish, bullish, and just very kind of small body candles. So that momentum we had from the Fed is basically fizzled out. Now we're in a bit of a crossroad. Is this momentum going to come back in? Are we going to see that strength come back in, or is this going to start to plateau or continue to plateau and roll back over? And that's really what I'm looking for, and basically a push back into this region. So we had such a big break through that level. I'm looking to see if we can come back to retest that, and then maybe some buyers come back in, or maybe we break through. We'll find out in due course. But I am looking at some downside for Euro. So if I drop back to the 30-minute chart, because my area hasn't completely broken yet, I am still interested in the shorts. And by my area, I'm talking about this zone here. So if this can hold, and for it to hold, I'm going to need to see a lot of bearish strength coming back in, because this was a very strong candle which just closed, which potentially could take us through the zone. But if we can see some strength coming back in, I will look to see if I can jump back in. First targets back into the prior low, and then if things go very well, back down there as well. I will change the bias or reanalyze things if this strength continues, and especially if it takes out this high, then that tells me that, okay, yeah, absolutely. Yeah, bullish strength has come back into the market. I'm not going to be so convinced with the sellers anymore, because of course that's the strength that I was betting not to come back into the market. So very, very important high here, especially intraday. In terms of the swing kind of scope, I've had a couple markets, 2-3 markets, which I've been keeping a close eye on. First one, which is the Nasdaq, which is probably the top of the list. I'm just waiting to see if I can actually get an entry with this one, especially when we do get into that kind of bullish climate. We might not, because I always look for the pullback, break and retest. my background is very heavily Forex, so pullbacks, break and retests are abundant, not as much with the indices, especially when we're kind of in that really bullish environment. We can kind of just have really explosive moves. But yeah, in terms of Nasdaq, again, this is the type of opportunity I really like on the indices when you have other major indices in the same group, like for the US indices, for example. You got the S&P, which has created new all-time highs. Recently, if you just take a quick look at the S&P, so new all-time highs past this point. The Dow Jones, new all-time highs recently as well. Last week, I'm pretty sure was when we had that move. Yeah, last week, new all-time highs. The Nasdaq, on the other hand, lagging behind. So because of that, I do expect the opportunity for us to kind of catch up with the S&P and catch up with the Dow Jones. So you can see you kind of got this V-shaped price action as well, which for me is a very high probability reversal pattern. Not perfect, but when I do see it, it's definitely a pattern which I want to be looking to get involved in. So that's the V shape there. We've taken out some key structure to our left as well. So that high is gone. That high is just about gone as well. Some minor structure below. I do think we are likely now to push back to the all-time highs, which will take us to 3750 and potentially above that 31K, so on and so forth. So Nasdaq for me is the top of the list for me in terms of interest, in terms of opportunity. What I'm looking at to actually find a trade, well, I was looking to see if price can come back and retest this level. I would have liked to got that entry there, but I was actually busy on that day. I think this was last Thursday, I believe. Yeah, last Thursday I was actually busy, so I didn't get the entry. So I'm actually hoping to see if we can either come back and retest that zone, or if price can break through the high and then break and retest this zone, which is probably what I'm expecting price to do. I'm not too sure if we'll get that extra pullback there, but if price does break this zone well, retest it, I think that's a great place for a buy. And I do expect to see a lot more upside after that. And of course, my targets will be basically back at the all-time high. So Nasdaq, I'm keeping a very close eye. And the other swing opportunity I'm keeping an eye on is silver. Again, both gold and silver have been very, very bullish. Both of them have had some nice breakouts. Gold was a bit more attractive, but silver's kind of taken my fancy because I feel like with gold, we've had a really big move and it's kind of gone not too far, but far enough where I need a pretty deep pullback for me to be interested now with gold longs again. At least on a 4-hour chart, higher time frames, daily, weekly, that's a different kind of situation. But you can see we had the breakout since that consolidation a few weeks back. Now price is actually taking out highs to our left here, so and significant highs as well. So I'm not really interested to jump back into some longs here when the market's looking a bit fatigued. We're looking a little bit tired. I would expect to see some pullbacks and some corrections. So I don't think this is the optimal time, especially if you're looking for more of a swing position to look to trade gold. Maybe intraday there might be another push higher, but swing where I'm trying to hold for, if things go well, at least a week, I would like that kind of pullback. In terms of areas where I'm looking at, this is the area I mentioned at the start of the week, and I also mentioned this area here as well. So it's going to be a pretty big move for us to get there in the first place. But the opportunity is still there with gold. So I am still interested. Silver, I do like slightly more, but again, it's basically the same opportunity. So I'm not going to, depending which one kind of sets up, risk reward looks better. I'll probably just, choose at the time. But I do like silver, pretty much the same opportunity as well. I'm also keeping an eye on the retest of this high, which is slightly above. You can see it's kind of the same price action. We're looking quite fatigued there as well. But again, if you can get a nice corrective pullback down, especially some nice rejections in this area, that's really the area which I'm looking for that next higher low. We've got this low, and the next one is where I'm hoping to see if I can actually find some entries and take silver higher. And I'm not looking for anything crazy, basically a push back to our last swing high, or at least the one before the last, because that is what I would say the last one is. But so the one before the last, where we had a lot of strength on the way down, that naturally would be where I'd be expecting to take the bulk of my profits. Now, of course, if I do expand to like a weekly chart, there is room to the upside. There is room to the upside for silver. We could be looking at a pushback to this area, which takes us back to 80, 85. I'm not really interested in a move that far. If things look good, I will trail stops, especially in a market like this. But I'm more than happy to take my profits at that zone. I mean, that's probably already looked with gold. So I'll keep an eye on both. So in terms of like swing, those are the three main which I'm interested in. And yeah, silver, gold, and the Nasdaq. So those are the main three I'm keeping a close eye on. And then in terms of intraday, I'm just going to be managing DXY because I still do like the upside there for the DXY, especially coming back into the zone, but it's critical that we do hold this area. And you can see the way we kind of moved over the past couple of days, 48 hours, a lot of consolidation, a lot of wicks lower. And we've just seen all this strength higher, and this is just about taking out this high. Now, it hasn't taken out that high well. It has left a big wick there. So that's why I mentioned earlier it was a slightly more aggressive trade. I always like when we get a break of structure with the close of a candle rather than just a wick. A close always means a bit more. A wick basically means rejection. Price tried to trade at those prices, but by the end of that window, it couldn't. But of course, if you drop to a lower time frame, there is candle closures there. So a wick for me is a break of structure, just not the best quality. Doesn't necessarily mean it discredits the trade idea. It just means it's a more aggressive approach, more aggressive trade. If you do get the close, probabilities just shifted a little bit more in your favor. But anyway, if we can hold this zone, I do like the idea of DXY seeing a push high, and this is kind of the intraday trade I'm looking at, which could turn swing. But that's the intraday trade I'm interested in, and there is upside as well back to this zone. And again, if I go to the daily quickly as well, and I'm not really interested in selling USD because we've already had a big move, and now we're coming back into support on our left here. This is really where we had a lot of strength a few weeks back. This is just not an area which I want to be selling into, even intraday. I'm just not really interested in. I like taking, especially in FX. I like waiting for moves that have had their fun, had their time in the sun, and they're starting to exhaust, and then taking the opposing move of that. Typically, I want to do that pro trend, but sometimes if we're really stretched, maybe near all-time highs, I will like counter trend moves as well, except the JPY because that's more of a kind of a unique situation. But yeah, in terms of DXY back at major support, if we can hold this, there is room for us to push higher. So that's what I'm interested in. Now, it doesn't mean I'm bullish long term, and I'm expecting price to do something like this because we very well could push back into this zone and then come absolutely right back down. And if I look in the higher time frames, I wouldn't be surprised with that. You can see a very aggressive close a couple of weeks back. I wouldn't be surprised if we do get a bullish move, which just turns into be retracement, and then price trades a lot lower. So it's more of a trade kind of for the rest of the week, maybe early next week, and then we'll kind of judge from there. But this is the idea I'm looking at for the DXY. Let me take a look on the hourly chart, see how we're doing. So yeah, we just had that weakness come in. Now this candle here looks really scary, looks really aggressive, but hasn't done much in terms of shifting my bias. But it is important we hold this support now and see some strength coming back in. If this weakness persists, especially taking out that low, yeah, I'm just gonna avoid USD probably for the next few days and just kind of keep an eye. What I think about pound USD, sure thing, can take a look. Pound I'm not a big fan of, to be completely honest. Out of the USD pairs, there's only 3 which I've kept an eye on this week. Again, I have been busy, but from what I have been keeping an eye on, 3 USD pairs have looked good to me: dollar CAD, Aussie dollar, and euro. Pound USD, I did have a look at this one on the weekend and just said, yeah, I'm gonna let this one be, because if we expand to the daily chart here, you can see how choppy this market is. It just doesn't really make much sense for me to be finding opportunities here unless things look really, really good. Because I actually did have some buys a couple of weeks back at this low, which played out pretty well. Now we're coming back into resistance, and we could actually see the opposing trade happen in some shorts back down again. But I'm not really liking the price action here, to be honest. So I'm being very, very careful with pound. We just had a really nice close there on the 4-hour chart. a lot of strength. But again, I wouldn't read too much into that. Reason being, we're coming back into resistance. And number two, we've already hit some major resistance to our left here. So this strength here, this big bullish candle doesn't really make me say, okay, let's buy pound USD. Number one, the market is quite fatigued. You can see how corrective we've been. You know, we had a lot of strength here. This was just after the Fed, and then we've become very corrective. So momentum is dropping. Number two, we've hit major resistance. And number three, even despite that close there, you can see prior to that, we saw a lot of selling pressure coming back in. So we're seeing evidence that sellers are happy to hold this area, and really seeing evidence that buyers are starting to fatigue as we've gone up. And because, again, if we look at the bigger picture, this is just a ranging market. I would say the probability of us seeing a push lower is actually far greater than a breakout. Not that the breakout can't happen. It's just if you look at the theme of the market, it's just up, down, up, down, up, down. I wouldn't bet on continuation trades, trend following trades. It just doesn't make any sense to me in these type of conditions. I wouldn't want to look to continue anything until I see some big breakouts above the highs or above the lows. So until then, I will be very cautious about any trend following type opportunities. So for me, I'm only interested in shorts for pound. And if I was looking to trade this one, I'll be looking at shorts from this zone. I wouldn't look for the full home run. I'd probably say back to support here. That for me looks like a healthy trade. Essentially just betting on a push back to support. Maybe we find strength there. Maybe we push back up. But this looks like a high probability opportunity because you're not looking for too much. And as long as that resistance can hold, you're looking good. But we do have some strength, of course. So I think it is quite important we see some strength in the opposing direction. So dropping back to the hourly chart, you can see we've got some strength there. Yeah, this could very much just take us higher. Absolutely. Really, really a lot of strength. So what I would want to see is like maybe 2-3 candles, some dojis here, and then some strength coming right back down for nice bearish engulfing candle, real force. And then that would tell me that, okay, yeah, this momentum, not really interested in following that. This weakness here is kind of really well when I place my bets. Entries there, stops above the high, maybe first target back at the low here, second target, back at this area, especially where all that strength kind of came from. Excuse me. So yeah, pound USD, definitely not my favorite USD pair just because of how choppy everything is. But again, if USD is going to be strong, like my forecast suggests, then yeah, I would expect downside there as well. Pound NZD, I can take a look. It hasn't been a market which I've been keeping up to date too much with. But we can absolutely take a look at it. Of course, if there's any other requests, stick it in the chat. But yeah, in terms of pound NZD, we've seen a lot of strength, maybe past 2-3 days, also 2 days. Yeah, conditions not great either. You can see how choppy we are here too. Yes, we do have like an overall drift, an overall uptrend at play. So naturally, I would want to be a buyer here. But yeah, we are seeing a lot of rejection at the highs as well. So the trend is definitely exhausting. In terms of the more immediate price action, I mean, I like how we're finding this low here. This potentially could be another higher low, but we do have resistance just above our heads. If I was going to trade a market like this, it would be very much short term, just because direction isn't clear. I could see an opportunity like this, back into structure here, find support, then a push back into that resistance. That makes sense to me, because you can see how many successive higher lows we've had. We had the low here, another higher low. You could even argue that's a low there, another one, another one, another one, another one, so on and so forth. So we're seeing successive higher lows, and at the same time, we're seeing resistance to our left, all being cleared and all being broken. So we're continuously breaking highs, continuously respecting lows. I would just bet on a continuation of that consistency right now. And we do have major resistance above our head, so we're not looking for any home runs, any big moves. So if you can pull back into structure, reject it well, maybe some entries on like an hourly chart just to maximize risk to reward. I think the 4 hour might not give you much there, but a nice opportunity on the hourly, especially if we can hold this zone. We can even refine it just to that area there. Yeah, push back to highs makes sense. The bigger picture for pound NZD, I have my reservations. Direction just doesn't look clear to me at all. Like I said, there is a slight uptrend, but it looks very, very tired as well. So yeah, a market like this, I would be very, very careful with any big forecast, any big moves, because direction, at least for me anyway, is not really on my side here. And direction for me is a big part of trading. Not that you will predict the right direction, but just have that bias of where you're expecting price to go because of X, Y, Z. And then once you've got that bias, then you look for opportunities within that. And that kind of gives you a nice kind of process, a nice kind of step-by-step plan to actually trade, because you don't want to just come into the market and just buy and sell because things look, bullish or bearish or whatever. You always want to have that kind of narrative, that bias of what you're expecting to happen. You could be completely wrong, but at least you've got, logical evidence to support why the market is likely to do this rather than that. And then you look for your entries and etc. And like I said, for pound NZD, I just don't have that. Therefore, this would be a market I would stay away. Intraday is different because you can take advantage of those kind of temporary trends, short-term plays. But even that, you always kind of want to have the higher time frames on your side as well. No problem. Happy to help. So yeah, I did say I like 3 USD pairs. So I said Euro, we talked about Euro. I like Aussie dollar as well to the downside. I was actually trading this one probably 2 weeks ago now. I had some shorts, over here. And I think I took this on this stream a couple of weeks back. I think, was it Thursday? Yeah, Thursday too. Yeah, I think just as I came into the stream. So I had some shorts here. It was a very small win. Had some shorts here, stops above the high. It did see some nice downside. Hit my first target, and then we had the Fed interest rate, and this big candle came and just took me off the trade. So I had some partials, and then the rest closed at break even. So a small win, but yeah, happy with the trade. Really, not every trade is going to be a winner. And then, yeah, since then, we've been super, super corrective on the way up. And again, I don't have much confidence that Aussie dollar is going to keep trending higher. Number one, look how corrective we are. This is super, super corrective price action. This doesn't give you confidence that the trend's going to continue. It could still continue for another swing, maybe another 2 swings, but likely is, especially in FX, when you do have corrective price action like this, it's normally a ticking time bomb for a bigger correction or maybe a complete reversal. And to be honest, it doesn't really matter, because if it is a larger correction, that's still a very profitable opportunity. If it's a full reversal, then of course that's very profitable. So you're expecting price to come back to this low here. But yeah, if you look to the left here, we're coming back into some resistance supply to our left here. We're having a lot of trouble here. I especially like yesterday's move. So you can see here, really strong push higher, and then basically the same size candle comes straight back down. That basically tells us that, okay, all of this momentum just completely wasted. Price is looking very exhausted. So I do expect us to roll over here for Aussie dollar. And where do I expect us to get to? Probably back to this area. This is really where all the strength came back into the market. So I would be looking at a pushback to 0.698. It's a very similar bias to the Euro USD move, and similar to, actually not similar to dollar CAD's the opposing move. Dollar CAD, I was actually looking at some shorts from this area this week, but not too sure if I'll get that. And to be honest, if DXY is looking bullish and tick my boxes, I'll probably put this on pause and just focus on USD strength opportunities. But as the week opened up, we had a lot of strength here to the downside for dollar CAD. I was hoping for a quick break and retest. We haven't got that, kind of fizzling out. Dollar CAD, I'll probably put to one side. But Aussie dollar looks really good in terms of entries, because that's the magic. That's the all-important question, how you're going to enter this opportunity. Well, there's 2 ways. You could look for the more aggressive trade, which is maybe some intraday shorts here. I've probably dropped to a 15. Yeah, some intraday shorts there, maybe when this candle close, and some stops above the high, so above this zone here. That makes a lot of sense. More aggressive trade. Why? Because we are still in this range. and price could push down and then push back up against you. So you want to be looking to lock in gains there. The more sensible trade, more patient trade, would be waiting for price to actually give you the break and then look for pullbacks afterwards. This is going to maximize your gains because, of course, you're entering higher, you're away from the noise. Maybe your risk reward is profitable, not profitable, larger. This will be the safer trade because you've got the break of structure. But the only thing is, you might not get the pullback, which is the kind of the other side of the coin, which is, okay, if you're going to be more patient, wait for a break of this, then the pullback. You might always not get the pullback, which is the downside. But nonetheless, still a really good opportunity if it does develop. Do you always aim for a 1 to 5? No, my risk reward varies a lot. It could be a 1 to 1 potentially. I do always try and push for more than that, but if the opportunity is really good and 1 to 1 is the logical target, I will take that. If it's larger, then of course I'll take that. So that I don't have a fixed reward. It's based on the market. But yeah, guys, we have come up to the end of my segment. I do appreciate each and every one of you tuning in. I do thank A1 and the team and Nick for having me on the stream. If you guys do enjoy the content that you just saw, feel free to check out my channel. A lot more of it there. But guys, have a great end to week. Happy trading, and I'll catch you all in the next one. Take care.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey everyone, how you guys doing? Good to be back here. Hope you guys are having a lovely morning today. Now that PPI is behind us, let's go ahead and see what the market's been doing. Gold, really minimal reaction. Dollar is a little bit softer if you go to a 4-hour chart. Everything's pretty much the same. I will say, though, on the bond yield side of things, the 2-year yield is starting to break down further, which I love to see that. That's going to be fuel for gold. That's going to be fuel for dollar to the downside. Let's look at the 10-year. The 10-year as well is starting to break down here. So that's actually a meaningful development. So it seems like the bond market is pricing in the possibility of actual, maybe not rate hikes, but just going into neutral camp. So I like to see that. Let me look at the CME Fed Watch. So I looked at it earlier, but let's refresh the page a little bit and see where we stand on it. So it seems like we have one rate hike and then we hold from there, and that is for December 9th, 2026. So we'll see. This thing has been moving a lot, though. I will say in recent times, you did have 2 hikes priced in at one point. Then you had just like a 1 hike situation. So we'll see. I think that as the data points continue to kind of come out, perhaps the case to be made for just rate hold forever or rate hold for a long time is just going to be more probable. So we'll see that. And here's what I will say for the gold traders out there. This chart is very important. If you see, we are right now, this is where we're at as far as rates goes. So we're going to go here. This is where the Fed is at right now with interest rates. So if you continue to see that this bar, if this goes entirely blue, then that means that we are going to just hold rates exactly where we are right now. So as long as you continue to see more of that action, that's going to be good for gold. If you start to see that the blue starts to move more and more to the right, that means rate hikes are being priced in, and that's bearish for gold. Okay, so CME Fed Watch probabilities just shows you the probabilities of the rate change for that upcoming date for the Fed meeting. And it seems like right now market's anticipating just 1 rate hike in December. And so that's going to be good for gold. The gold story is starting to get a lot better, I would say. And actually, if we go to the Edge Finder and we just look at the top status page, the gold has increased once again in favor of gold. So you're now going, we had a change of 4 there for gold. And so now you're getting a bullish, very bullish reading of plus 11. You're starting to see that happening along the major currencies as well. So pound dollar is getting a very bullish reading. Euro dollar is getting a very bullish reading. Silver is actually getting a very bullish reading as well. So perhaps there's some opportunity there. Me personally, I'm just going to stick with gold. But for those that are looking to get into the precious metals trade, maybe silver could be another option for you as well. It just depends on your strategy and how you would approach that. Aussie dollar getting a bullish reading as well. Dollar CAD and dollar Swiss is getting a very bearish reading. So I'm looking at that. I was talking with Nick earlier, the possibility of me kind of adding to this trade, this dollar bearish trade. And I would like to do that via dollar Swiss. That could be one option. There's really 2 options. It's euro dollar long or dollar Swiss short. I'm already in euro dollar long. And so ideally, this thing just drifts higher. What I could also see happening is you get like a breakdown into this level of support here, and then you can take it higher. If that does happen, I could get stopped at break even and re-enter again. That's possible. Dollar Swiss, though, I really like this chart. It's just not really showing me the technical structure that I need for me to get into the chart. So you could also make the argument that this is happening. So let me go to a 4-hour time frame. And I'm not going to act on this today, but I'm just trying to like see this and do this live with you guys. But if I just look at this right here, resistance on dollar Swiss, you have this kind of trend line here. So like, one could say you could go short here, stops above structure. What is that? 80 pips, 90 pips above. And then your take profit would be this level of support. And then you can also even break it down to the 200-day moving average if you break down further. That could happen. But again, I don't see the DXY really moving that much for me to, entertain this trade. Like if you were to see like some breakdowns in DXY, I would rather sell lower and then buy it back even lower rather than like just chase right now, right? Like I want to see that technical breakdown with DXY first before I go ahead and do that. But again, this is one option that I'm actually looking at. So we'll see how that comes about. But for now, I'm just going to hold on to my euro dollar long position, and that's how I'm going to continue to play the FX trade. But for now, what I'm staying with right now is gold, right? So gold is one trade that I'm in. And I wish I had more for you guys, but I really don't. Like that's kind of like the thing right now, right? That's the shiny object, gold, right? Pun intended. So I'm just going to stick with that, right? So we are getting close to that this level of support, or we are already in that level of support. So if this level does break out, then I will go ahead and get stopped out here. Hopefully we get some bigger pullbacks to where I can go ahead and just re-enter the trade long once again and continue riding it higher. But this has been a really good leg. Nothing lasts forever, so we'll see what happens. But I'm actually very open-minded and willing to get stopped out and just re-enter again. If the 10-year breaks, I will chicken out of USD long. Max, that's a great point. So along with the dollar Swiss trade that I'm looking to take, I'm looking at DXY technicals to see that breakdown happen. But another breakdown that I would look for is within the yields chart, right? So you already have the 2-year yield, which the 2-year tracks kind of Fed policy and tracks that the best. The 2-year is already breaking down, right? So we're seeing that here. So we had this upward trend line in the 2-year yield. We broke below it. We are now starting to see a continuation lower, which is good for the dollar short story. If you start to see that happen in the 10-year, then that I would say is a really strong development for the dollar bear case. So I'm watching this level too. So you have the war start right here. We'll see what happens if we get to this level here. If we get to this level and you break below it and continue, then that is straight up dollar trade starting to unwind, right? At that point, I would expect for there to be no rate hikes priced in. It's just going to be a rate hold. Yeah. Max, I can see your point though. It is challenging, right? Because it can go either way. Like right now, DXY is just doing this, right? You're seeing the fundamentals paint the picture to the downside, yet the technicals just haven't broke down yet. They're just kind of hanging out here. So that is the tricky part. But yeah, definitely watching yields, watching this chart, of course, DXY chart, and I'm watching oil too. That's also going to be an influencing factor there. So oil is down 1.6% today. It seems like it's rejecting this level of resistance. So hopefully that is the case. If we drift back to the 200-day moving average, that to me, that's positive. And as long as we stay within this range of 84 to 68, 64-ish, anywhere within here, that is okay for the inflation story and the gold long story, the dollar short story. Yep, USD CHF for a catch-up trade. Yeah, because like if you think about it, right? Let's look at the catch-up trade idea. Like Max kind of articulated that the best way I could. USD CHF, right? Compared to something like dollar CAD, right? Dollar CAD has already made its leg lower. It's already pointing to the downside. So USD CHF, opposite story. It is still up there. Now, is it at the high? No, it's not, right? This seems to be like the high, but it is having some catch up to do. So I do like that trade for sure. Again, just too early for me to take it. We'll see. We'll see what happens. We will see. But I like the trade. The 30-year for long term. The 30-year is also really good for measuring risk premium. So like when you had that Fed meeting, like when you had that Fed meeting with Warsh, right, where he was trying to talk down the short end of the curve, but the bond market was like, nah, right? When you have like that divergence in the Fed, maybe you lose some confidence in the Fed. That is where you would see the 30-year tick higher, right? Think about it. If you're going to tie up your money in a U.S. bond for 30 years and you're not confident as you may once were at one point, then you would demand a higher yield, right? So that's why you see the long end of the curve shoot higher when there is uncertainty, right? If you are extremely confident in the US or in any asset, if you're extremely confident in something, then maybe you're like, you know what, maybe I don't need that much of a yield, right? But again, the common saying, more risk, more reward. The more risky the 30 is, the idea of holding something for 30 years, the more reward you would like to have. So the long end of the curve tracks kind of risk, and the short end of the curve tracks Fed policy. Yes. 2-year yield is like your short term, your weekly driver for sure. I have a look at pound Kiwi. Edgefinder is very bullish, and there's some good long opportunities. Let's look at that. So pound Kiwi is getting a very bullish reading. Let's look at this. Pound Kiwi. You are seeing a breakout. This looks good. I do like the idea of going long pound versus the Kiwi, or even a long stretch of time as well. I do like that idea. I don't know, man. I might take this very boring. I might do something like what? Well, first let me say this before I even go into that. Let me look at the swaps for pound Kiwi. Let's go to carry trade scanner. Pound Kiwi. Okay, buy direction. You're getting positive swaps on the buy side. What I may do with this, and similar with other minor currency pairs, is I might just take a very, very boring approach. So I like the Kiwi basket. I like, not the Kiwi basket, I'm sorry. I like the pound basket. It's very strong. The entire pound basket is getting bullish readings on the Edgefinder. So what I may look to do, because you have that positive swap in the buy side, because the pullbacks are not presenting themselves, I may take this super, super boring to where I just take a position here, super small, then another buy side position here, super small, another one here. And then like, if I get tagged into it, great. If not, also great. I'm getting positive swaps, but it is just such a small position. But then that raises the question, well, is it even worth deploying capital into that? Maybe, maybe not. But pound Kiwi looks kind of good. Pound Aussie. See, like pound Aussie, like technically speaking, I don't know, man. You're kind of like in the middle here. You need to break out of this level of resistance and the 200-day moving average. So if I take a boring enough approach, then I could take, I could absorb some position sizing here, and hopefully one day we break out of this, and it makes a lot of sense in the long term. But let me look at the swaps on pound Aussie. Yeah, so I just may take a boring approach. It may not be something that you guys would like to see commentary on. See, like pound Aussie, I'll have negative swaps if I take this to the buy side. So I don't know, just tricky. Again, it's we've been saying this, but just there's better opportunity out there. Metals is gonna be it. Hey Marco, how you doing, man?
Oh, hello. I'm looking to buy Dell, so I'm kind of I was busy in the background calculating the lot size, but I'm gonna wait for the next 15 minutes and see what happens on that.
You're
How
gonna
are
calculate the lot size? You're not just gonna go all in?
Well, yesterday I did go all in, so today I thought I would change it up a bit and maybe actually try and calculate the risk.
Cool. Well, Dell, what's the story with Dell?
So Dell is breaking out of this consolidation of this flag. The SPY is near all-time highs and looking pretty healthy. So I want to buy this breakout with a tight stop loss at the open or the yesterday close, basically. And kind of the game plan is to wait for the first half hour of the open for things to settle down a bit, because in the first half hour it's super volatile. You can get pinged out very easily, and this looks like a kind of a big red candle for now. So if it hits the stop loss before I actually go in, then it negates the trade. So Dell looks fine because it's breaking out, but the negative is that every single trader on Twitter is looking at the same thing as me, which I kind of don't like. That basically means you can get chopped out very easily because the market tends to stop everyone out and then it actually goes.
Or you can have a GameStop situation where you have enough volume on one side from the retail crowd. Maybe we all hop in there together, Marco. Maybe we start this campaign where you have a GameStop situation on Dell.
Well, if you guys want to help me out, definitely go ahead and buy. I'll let you know when I buy, so that you can buy after me, right? So that I can exit on the uptrend.
I'm gonna be your exit liquidity. Well, I'm happy that you're seeing other opportunities aside from just like FX and gold, because really, Marco, I really have nothing. I wish I had more. Gold long. Dollar short, right?
Yeah, please do gold. Please,
gold?
Can you analyze gold?
Let me analyze gold for the 500th time. I asked myself the question, like, given the environment and maybe the chat, if you guys want to give me your honest input, like, please give me your honest input here. Do you guys get tired of me just talking about kind of the same, because there's really nothing else really, Marco, like stocks are at all-time highs, currencies are just boring. Like, do you guys care that I kind of go around gold multiple times? Like, I try my best to kind of pick out things like something's happening in the bottom market, like right now the 2 years breaking down and Fed probabilities and stuff like that, but really there's really not much I can really do outside of that. Do you guys get frustrated, chat, with me, talking about gold constantly, or is it enough? I also try to, like, I talk about my burping dilemma to try to diversify the conversation a bit, but you guys let me know.
Yeah, it's a bit of a slower week, but like, we could talk about other different trading related stuff. We talked about prop firms this week, which was pretty beneficial. We found out that you survived the FTMO transition and you're not affected, so that's great to know. We can talk about psychology, we can talk about multiple things, but the PPI was today and it came in actually a bit lower than I thought. The market reaction is super muted, so the dollar ain't doing much on the news, but PPI came in lower and the PPI is kind of a precursor to the CPI. So if the PPI comes in lower, you would expect for the CPI to, on the next print, be a bit lower as well, because the producers, they transfer inflation usually to the consumer. So the consumer always gets screwed, basically.
So yeah, we did have that softer print there on PPI, and Fed probabilities are now showing for. I'm not even going to count the last one because it's so. Oh, no, never mind. It just changed on me in favor of what I was going to say. So Fed probabilities is just pricing in one hike in December, and that is it, Marco. So our case of just one neutral hold for a good while is becoming more true as they progress. I joked about this earlier, but the yields are actually breaking down here, which is giving us more fuel here. So the 2 years down 1.4. So that's a meaningful change there. 10 years also breaking down, but you're not seeing that translated into what should happen, which is dollar softer, right? Dollar's kind of just muted, like you mentioned, and gold is also just kind of muted there. So I don't know if there's a catch-up trade to be made on that front, but this is only one session, so we need to see if the breakdown continues. And if it does continue, then I would imagine that Fed probability starts to shift on CME, and then you probably do start to see that breakdown happen in DXY and all that stuff.
Yeah. Maybe in the upcoming few weeks, we do see that yields down today quite a lot. Big shocker. I didn't catch that. Is it the short end or the long end as well?
The short end is the one that's doing most of the work here. And someone in the chat just mentioned that big stock move. Nasdaq's up 1.12 today, so maybe that's the benefactor there. So it seems like the equity market is benefiting from this more than you would from currency world. So Nasdaq is continuing higher. Marco, that Dell trade, if you're gonna take that one, then if you have a continuation here on the index, that would probably be the confirmation that you need, wouldn't it be?
Yeah, exactly. So what you're watching for Dell, because it's a technology company or a software company or whatever the hell it is, the Nasdaq, if it's breaking out, it's gonna bring Dell with it, because most stocks, like 70% of stocks, move they move with the index. The 30% may move because they had earnings, breaking news, or something else, but 70% of them move with the index. It's just a question of like what's the what is the extra volatility that you get within an individual stock compared to just buying the Qs. So Nasdaq breaking out is great for software. I would say the hottest sectors at the moment is what it says on the stock box. So oil and gas seem to be doing pretty well, and software stocks such as, I think Dell is in that as well. So the semiconductors were the thing that was pushing stocks up in April. So I think the SMH is the ETF or something like that, and now it seems to be software. There's with each small bull market, you need to identify which sector is the main leader, because there's always going to be one sector that's going to outperform everything else and basically bring the S&P to the upside mostly on its own. And then what you try and do, you catch the best performers in the sector. So right now, if you can catch some oil and gas companies or some software companies, that seems to be the best way to go. That's what I'm trying to do, at least.
It seems like a good way to approach it, Marco. It seems like Nasdaq could be having what could be a catch-up trade to the S&P. If this continues for a couple of days, it seems like that could be a really strong play.
Yeah, because the SPY is at all-time highs, and the QQQs are jealous of that. So probably they want to go up as well. They want to hit all-time highs, and I'm all for it. I talked with Nick about being like versatile. By the way, did we do gold yet? Did we? I'm just kidding.
Many times.
many times. Anyway, so like for the people that are only trading one thing, gold or silver or euro dollar or any specific asset, there's going to be a time when that asset is not going to be moving for months, maybe even a decade. Like gold had a period of 2 decades where it just went down or flat. It was from the 80s to the 2000s. So if you can be versatile and trade what is active at the moment, well, first you're going to satisfy the need of always being active in the markets, because you'll always have something to monitor and let's say trade with, even with small risk. And second, your equity curve should look much better, much more stable if you can focus on what is moving at the moment. That's where the edge is, because what we are trading at the end of the day is human psychology. Like, we're trading the mistakes of other people. So if there's a lot of volatility, a lot of market participants right now in stocks, that means a lot of mistakes will be made as well. So we can exploit that and make percentage. But with gold, where there's very few participants at the moment, the volatility is pretty low. Okay, so now it broke out, but let's say 2 weeks ago, there was very little opportunity with the low volatility. So that's the name of the game. Like, watch for inefficiencies and go where the money is.
You know, one kind of bad example or a good example of kind of sticking with one asset class and marrying onto it and how it could really negatively affect you is like crypto, right? Like the crypto crowd is a very united, very stubborn crowd. Like, it's crypto or nothing. And so when you get that kind of behavior, kind of mind frame or framework there, you can get stuck in something like crypto where you're having this just crypto annihilation happening across the board where everything is red. You know, they kind of want to stick with it, right? They kind of want to marry the idea that it's going to be this one home run thing eventually one day. And that's bad, right? You want to be able to diversify, except that maybe what you thought was important is no longer important, and being able to flip flop around into what's the new theme. So this is a really good chart example of like what not to do. Okay, like, don't just marry one single asset class and stick with it forever. Like, you definitely want to be open-minded and diversify as much as you can.
Yeah, and like, what do you think about this? So I would say before the next bull market starts, we need to wash away all of the trash, essentially Michael Saylor and MicroStrategy. So right now they're surviving. Looks like 63K is still an okay price for them to just move money out of one thing into a different thing, pay the dividends, pay this, pay that, dilute the shareholders. But I would say 50K, 40K, that's where they start running into an issue of possibly bankruptcy or just taking a big hit to their stock price. So I think before the next bull market starts, we need to wash away all of the guys like Saylor, like the Tom Lee guy with Ethereum. What do you think about that? Can we go up from here? Or do you think we still need to go down and correct a bit more? Because this is not a huge correction when you backtest Bitcoin. Usually 70 to 80% is what you're looking at, and then the price goes up.
I think for you to have a sustainable upward directional move in any asset class, not just Bitcoin, you need to have some sort of a washout, right? That's just market efficiency. That's just market doing what it does. And you can't avoid that. Similar to situational awareness, right? You had a lot of leverage, super sensitive to volatility. You had a pullback in like the Cosby and stuff like that, but it wasn't like a complete breakdown in the Cosby, but that was enough to wash out some of the bad actors. And now what are you saying? Marco, I saw this on X here not too long ago. I was going to make a post about this, but what's going on with the Cosby and Asian markets here? It's doing quite well now that you have all of those bad actors away. So it's made some kind of a recovery. So similar with Bitcoin, you need that to happen. Then the question becomes, well, when does that happen and what would it look like? Well, Marco, I think that with Bitcoin, it's probably a bigger unwind than we probably think. Nick mentioned this before, but like Bitcoin hasn't traded alongside in parallel with a true bear market. So like if you were to see a real true bear market, I think that would be extremely ugly for crypto. That would definitely wash out a lot of the bad actors. And then at that point, you have a more sustained upward trend where you wash all of the bad hands out of there. So the dilemma with that is like, first you need to see that bear market happen in the economy or whatever. So you can't predict that. I don't know when that's going to happen. They say AI bubble will do it. They say, Fed unconfidence, the bond market will do it. Who knows what the driver is, but you need that to happen first for you to start seeing that come to fruition. So Until that happens, I think with Bitcoin, it's just, again, the tension goes elsewhere because there's nothing really important enough or anything to just draw you into that trade. Me personally, like the way I would play it is if I somehow get to that 200-day moving average, then I'll short it. But other than that, there's really no way I would. There's no buy the dip strategy just yet. There's no anything like that.
Yeah, I would say with Bitcoin. So the biggest tell is that the SPY is at all-time highs. The Qs are near. The gold had a breakout, and Bitcoin is still doing nothing. So the relative strength tells a lot. It tells you basically what you mentioned, that the attention is not on crypto, and if you don't have the attention, especially from the retail, all-time highs are not going to happen, or even a strong rally, it's not going to happen. And I would be
Definitely
extremely
not.
surprised if we rally from this point, because I think this is not capitulation. I think we need to go down, correct more, 60, 70, 80%. Then, like, we get the capitulation, we get Saylor out of the market, we get everyone on Twitter saying that Bitcoin is done, then we can go up. So that's what I think on crypto.
For sure. I think you still have a lot more squeezing to do. I say 50K, Marco, is a good level where, like, for an
Yeah,
not an
50K.
intraday,
Yeah.
for like a swing trade off the 200-day moving average and just finding or trading into a level that I'm pretty confident there could be support. But if you do see a true bear market in the equity world or across the US economy or global economy, and everything starts to sell off and correlation goes to 1, then 50K really can be like, I don't know, 20K maybe in crypto, right? Like I can see it going down that far from now, which is, how far is that? So 50K is 22% away. 20K is 68% away.
Yep. It's a bit crazy if you think about it, but it's crypto, so it can absolutely happen. And what you notice if you study the previous bull cycles, every time you get a new bull cycle, the opportunity becomes smaller and smaller. Like the first one was like 1,500%, second one 5,000%, third one 3,000%, and this one is probably going to be like 1,500, or let's say maybe even not 1,500, but something that's not so crazy, let's say, because with each bull cycle there's more and more participants, so you need more and more volume to have crazy returns and push push Bitcoin to, let's say, I don't know, 200K, 300K, 500,000.
Yeah, it's crazy, man. What's going on with the stock market? The S&P 500 new highs,
looking very good. Yep.
The bond market continues to break down lower, and the big benefactor here is the S&P and the Nasdaq. So awesome. Seems like Ball Out there is in the trade. So congratulations, Ball Out.
Yeah, I mean, maybe the stock market waited for the CPI and the PPI so it can go to all-time highs. Since the inflation is cooler than expected, you can be pretty certain that Warsh is going to say no hikes, inflation is lower. Of course, we do have one more inflation print before the Fed, and that one is going to be even more important than this one. So that one will be the tell, because that one will show the inflation after the full closure of the strait. So that's the one that can introduce a lot of volatility and that we can potentially trade. But so far, it just seems we won't get a hike in 2026. Like no hikes 2026. I would say whatever happens, we won't get a hike in 2026. But now the market thinks the same as me, because the inflation is lower, because the jobs market is lower as well.
There's really Marco, there's really nothing standing in the way anymore. Like after this PPI release, like you do have meeting minutes. Here, I'm gonna switch the calendar to this. We have meeting minutes next week on Wednesday, but beyond that, it's really just smooth sailing from here. So there's really no obstacles anymore for the equity market to go ahead and have to digest and wait for. And like you mentioned, inflation came in cooler than expected. So that's really a good sign. And so maybe you have this continuation for the remainder of this week, maybe going into the Wednesday before the meeting minutes. Maybe you see some bullishness in the stock market, playing that game, and then it stalls out right before meeting minutes, and then that's the next obstacle. But until then, you're smooth sailing, man.
Basically, that's how I'm seeing the situation and how I would like for the situation to develop. That would be pretty good for individual stock picks.
Yeah. Well, all right, man. I'm gonna go ahead and pivot out here. Thank you for the conversation. I did this earlier, but one more time, guys. I'm gonna drop the link in the chat for the free Telegram channel. So definitely go ahead and join. There's no payment required, nothing like that. It's just straight up completely free value. You have chart markups, polls, bonus content, all that good stuff. We cover gold a lot there. So if you want gold coverage, right, and maybe we don't cover it on the live stream or you miss it, go to the Telegram channel. There is gold coverage there. And you know what? I will say this. I'll make a gold post today. So after this, I'm going to make a gold markup for you guys. So if you guys want the breakdown, the scoop in gold after this CPI, PPI reading this week, go ahead and join the Telegram channel and you will be able to scratch that itch. But Marco, thank you, man, for the conversation. I'll see you tomorrow.
Thank you as well, Alan. And we'll talk tomorrow.
All right, man. Take it easy. Bye-bye.
See you. Goodbye. So let's continue with the regular program. So Dell actually starting to look pretty good here. So give me 1 second to execute this position. So 499.71 is going to be the entry. Let me see, Dell. I have my calculator on the side. 499.71. Was that it? 500.5 it's now. And the stop loss goes, so the stop loss goes on the previous market close, which is 484.5. 484.5. Let's do 0.2% risk. And the quantity is, okay. So, okay, let me put this into my interactive brokers. So I'm sorry about this. I just need to put this on because it may run to the upside. You never know. So I have to take advantage while it's still hot. Let's do a market order. Let's go with the quantity. Good till canceled. Stop loss. Good till canceled. Stop loss goes on 484.5. Whoop. 484.5. Submit. And okay. So order filled. And now I'm in. We will see what happens with this position. At the moment, I'm basically focusing on individual stocks because that's where I can see most of the edge is located. So I'm in RHI, which almost hit the stop loss, but has now recovered to break even. VLO, which is in profit. CoreWeave, which is looking pretty good. So essentially, I'm implementing 2 entry strategies. First strategy, I can break down the whole process. I think it may be interesting to some of you. So I'm only trading stocks when the SPY is in a clear uptrend. Order filled, yeah, order filled. That's like the best possible sound. Anyway, if the SPY is in an uptrend, if it's above the 50, the 20, and the 10 EMA, and if it's at all-time highs, that's a good market condition. So if we zoom out a bit, these are the market conditions where stock picking works. This, and the current one has possibly just started. This is no bueno, and this is horrible as well. So just super bearish. And this, I would say this is easier because the price is below all of the EMAs, so you just do nothing or you buy the dip. But when the price is flat and range bound, then the price can sometimes be above the EMAs, but it's not breaking out. So here you can take a lot of losses. You have to be really careful in this area right there. But anyway, we are now in the bullish part for the SPY, which means you can look for stock picks. Now, you need to identify which sectors are the leaders at the moment. So personally, from what I can tell is IGV, software is the leader. Software is having a really nice rally to the upside and could be the leader. In April, the leader was SMH, so semiconductors. Look at the massive explosion that they had from April. But now it's software and energy, which is basically similar to what the stock box is saying. So if I show you the stock box and we go to the top sectors page, okay, top sectors, you can see oil and gas and software, IGV, oil and gas, XOP. So I think I have XOP here. I must have it. XOP. No. XOP. Let's put it on there. XOP looks okay, looks healthy, looks fine. And there's a good resistance level here which could break out. So that's what I'm focusing on. I'm focusing on the sectors that are leading at the moment, and then you try to find stock picks in those sectors. So Dell is software, I would say. Technology software kind of could be connected. RHI, okay, it's not software or technology, but it looked good in terms of technicals. VLO is energy, so oil and gas. CoreWeave is technology, I would say. I think they produce GPUs, so it's good with the artificial intelligence story. And yeah, so you identify the individual stocks, then you can use 2 entry models. You can find both of them on this website. So Kulamagi, free timeless setups that have made me tens of millions. I use 2 of them. I use breakouts and I use the episodic pivot. Okay. By the way, this is the guy that's in the latest Market Wizards. He turned, I think, 10K into 100 million in a couple of years, confirmed. So it's not a scammer. What he did though, he slapped on massive risk. I'm not gonna lie. He has a huge risk appetite. That's why he was able to turn 10K into 100 million. Quagmire. Yeah, Quagmire. So his risk management is pretty crazy, but the edge does work. And yeah, I just use very simple breakouts and the episodic pivot to give you a rough idea. A breakout is basically a flag and a pole. Okay, so a pole and a flag. So this is your pole and this is the flag. Or let's say this is where it starts. And then you get a breakout out of the flag and you buy the breakout. The episodic pivot, the strategy here is you need to have a gap up of at least 10 to 15%. The fundamental reason for the gap needs to make sense. In this case, for CoreWeave, the reason for the gap up is that their GPUs are now going to last 9 years minimum, not 6. So their old GPUs can be used for 3 extra years, which is going to bring extra revenue for the company. They thought they were going to have to discard the old GPUs, but they can use them for 3 more years. That's pretty bullish, I would say. So that's an episodic pivot. And you use a trailing stop loss to get out. The management is basically you wait for the price to close below the 10 EMA if it goes to the upside. So you wait for the price to I can show you actually Best Buy, BBY. So I bought here. I got out prematurely because I didn't follow the rules, but the exit would be here. Okay, or GH. I can show you GH Global or Guardian Health. This is it. So you basically buy the breakout. Now this is like textbook. You have a pole, you have a flag, you buy the breakout, and then you trail it and you exit when the price closes below the 10 EMA. Now here it didn't really close here. Sorry, here it closed. Yeah. On the 16th of July, it closed below the 10 EMA. So that's your exit right there. By the way, if you do want to get the stock box, and I use the stock box heavily to find the top sectors and to find the top stocks as well, because it always helps if you have the stock box reading to go in favor of your trading. So link to the stock box is in the description, and you can use the code Marco to get 15% off. That's for the Edge Finder and for the stock box. Works on both. So that's trading basically. You try and identify what is moving right now. What is the best thing to trade at the moment? Is it the dollar? Is it Aussie dollar? Not really. Is it gold? Yes, but on pullbacks. Is it crypto? No, absolutely not. Is it oil? No, because there's too much uncertainty around the Middle East. Is it bonds? Maybe. Is it stocks? Absolutely. Stocks, all-time highs, big uptrend, looking great. So I do want to mention before I go, Ola Prime, if you're looking to get funded, you can get 20% off with A1 Live. Okay? So 20% off A1 Live, Ola Prime. Take a look at the reviews, open up the Trustpilot, talk with our traders, join the A1 Discord, talk with the traders in the Discord. Ola Prime is a good prop firm. And one thing that I really like is that they don't have a consistency rule. That's a big, big bonus. And you get a good price with the code A1 Live. So that's about it for my segment. You have Tiger coming on in 30 seconds. I want to wish you guys good luck. Well, I'm going to see you tomorrow again. I'll be doing 2 segments. So I'm going to wish you good luck tomorrow and to have fun over the weekend. But for now, have a great rest of the day. And I'll see you in like, what is it? Maybe 20 hours, something like that. Yeah. Thank you. See you.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
Good morning, everybody. Happy Thursday. I hope you're doing well out there. As always, let me know what tickers you're looking at. We'll take a look at whatever you would like to check out today. And obviously, we did have our PPI results that came out earlier right here in the center with the nice red ink on it. Another cooler inflation report. That's now at least 5 in a row dating back to last month. We had CPI, PPI, PCE all cooling down last month. We had CPI yesterday and now PPI today. So the bond market's really kind of changing its idea, its mindset around the whether or not we're going to raise 25 basis points at our September 16th meeting. Just kind of taking a little bit of a time warp back in time a month ago where we were at a, let's see here, where were we at last time? With 24.9% chance of, only a 24.9% chance of keeping rates unchanged. A week ago was up to 45. Yesterday, before the CPI came out, we were at 54. It did raise to 59 afterwards. And then today, we're all the way up to 65% chance of keeping rates unchanged. And needless to say, the percent chance of the 25-point hike has dissipated as it has inclined. So, yeah, that's just kind of a look at your inflation readings. It's really having a bearing on whether we do or don't raise those rates next month. So just thought that was quite an interesting move from a month ago to a week ago to yesterday to today. So currently at 65% chance of remaining the same. And that is your updated look on the rates, guys. We have seen the yields kind of drop over the last couple days. They are dropping again today. So yeah, that's just kind of where we set at the moment. And when it comes to the data over here on the dollar, we did have that percentage drop from 30% to 20%, but mainly because of the jobless claims. First one in a while that we've had where we've actually had an increase in the jobless claims number versus forecast. So dropped from 30% all the way to the 20%. So that must mean we've dropped even further into the basement, right? For the dollar. Well, the Japanese yen has something to say about that, because yesterday they had a miss on their PPI, and they are the ones that are in the basement at only 16%. So taking a look over here at the surprise index, there's your current picture on the strength and weakness of these currencies from a fundamental perspective. So Japan has taken over the basement, kicked the dollar out, and it's just kind of floating around on its own as we speak. So second weakest currency on the fundamental level to the yen's weakest, and then the Kiwi remains at the top with a 66% beat rate. So that's kind of your up to the minute look at currency strength for the FX traders out there. If you're just looking at the data itself in isolation for a moment. Yeah, that's kind of the picture there. So moving over to the top setups, and I did just refresh this, but I'll refresh it again. Gold, silver, clear at the top of the list. Gold is number one, I do believe, if I refresh this. Yeah. Gold tied with pound dollar and pound yen. Silver is fourth at a +9. So, yeah, guys, let me know your thoughts on some of these. If you have any pending orders, or you're looking to buy or wait on retracements or anything of that nature. In the basement, we still do have dollar Swiss, but it's still just a little bit too sideways for me. In fact, I think the daily moving average is slightly pushing up. Well, that's not something I want to see if I'm trying to short it. I need to start seeing some breaks of structures on the downside before I start getting any interest in shorting. And then you add the sentiment, technicals, and everything else in. Dollar is at a -7, all on its own. Currently the weakest currency. So, yeah, let's take a look at some of these. Let me see what you guys got posted up here. Deleted. Silver from crude oil falling seems illogical. Yeah, Sauce. There's a lot of things that seem illogical right now. Some pairs that are some assets or markets that typically move in concert with each other are not doing so much of that. Some that typically kind of inverse each other are not doing that. So the market's all over the place right now. The geopolitical situation, I think, just kind of has everything in a tizzy. Plus the uncertainty now as to whether or not we're going to hike rates like we thought we were a month ago. To where now it looks like we're losing more and more chance every day, especially with every inflation reading that comes out to raise rates. It's looking more and more like we might keep rates the same. So, but hey, between now and September 16th, again, we've got PCE at the end of the month to see what the Fed's favorite gauge of inflation is going to show us. Oftentimes the CPI, PPI that we get at the start of the month, like we have, or I should say more the second week of the month. I guess that would be a little more accurate. A lot of times, but not always, that's kind of a prelude to the CPE. And then we also have CPI, PPI early September, just before that reading. So we still have 3 inflation readings to go before that final decision is made. And a lot can change on this, guys. Talk about the Fed Watch tool. So, yeah, we'll just continue to kind of monitor that. But yeah, there's no denying the chance of that rate hike has dramatically declined since last month. So, yeah, as far as gold and silver, since you are asking about that, though, yeah, we're still currently in those overhead resistance points, guys. With gold right here, especially. I mean, we've got that daily 4-hour confluence. We've got now 3 daily candles with wicks. So those are rejection wicks, guys. That's not to say it's immediately going to necessarily completely drop and bottom fall out of it, but that's a pretty good prelude, or a pretty good sign. The wicks at the top are much, much larger than the ones on the bottom. So I still need a discount on this thing, or I just need it to blow through and give me a new high for a potential retracement. So nothing has really changed for me. It's basically where it was at yesterday. But again, those wicks are a pretty good preview of what could potentially happen. So I'm waiting still on that 4167 level, that 2-hour demand zone all the way down here, that had the better look on volume than this one up here. Remember, this had the weaker volume, and I just didn't care for it. So So yeah, nothing's really changed. I kind of drew this up for you guys yesterday, but just kind of waiting on this little strategy to happen. Decline, bounce, break a structure to the upside, retrace to the source of that power, and look for a buy at that point. Not financial advice, as always. Just like my little watermark says at the top there. I stole it from Nick. Okay, this is just my 12 and a half years of study of charts and supply and demand, and my relatively newer sense of the fundamentals and sentiment, I would say, over the last few years, okay, that I've really started getting deeper into that. So yeah, no play, sitting on my hands on gold. Same is true for silver, as we are bouncing into the same or equivalent set of overhead supply zones. That was let's go to the daily on that. Wanted to see what the wick status looks like. Yeah, we're still getting some pretty good rejection wicks on it as well, especially yesterday's candle. We did close below the 50% of the range of the daily candle. So gold is still clearly my favorite as it sits right now. Okay, so and then oil, as far as oil goes, those circles are just something I'm working on as far as a separate project. Some major swing highs and lows, some content I'm creating for another company. So just ignore the circles for a moment. But yeah, same thing with oil. It's just pretty well equilibrium as far as I'm concerned. You got your swing low, your swing high, your major ones, and we're just floating right out in the middle of it as we speak. And the one thing with oil, if we're just keep looking at the technicals for a moment, because we don't really have a strong enough fundamental sentiment picture, in my opinion, to be shorting. I mean, it's neutral according to the top setups on the edge finder over here. I think it is very slightly bearish if you just kind of, crossing hairs, -1, -2, something like that. But I mean, it's one of those things where if you held a gun to my head and said, Tiger, you have to get into a trade right now, it would probably be a sell, just because at least we have the technical picture to kind of agree with that somewhat. We have our high point. We have a lower high. We have another lower high. We have a low, and then we have a lower low. So at least we're within the parameters of the high-low structure, right? And clearly you can see it looks like it is trying to roll back over up here. Now, I got to be honest, I didn't really see anything great in this particular area where it's given us our wick as far as supply. That candle is just a little too high for my taste to be drawing this up for a supply like this. Okay. Just mainly because, well, I like it on my last candle up before the decline. I really like to see the candle at least the same height, but in this case, we had a Friday gap and closed pretty hard at the top, and then we had our Sunday gap down this, or I should say Monday gap, just a week ago, a week and a half ago. So I just don't like the way this picture looks. It's kind of hard to really explain, but yeah, I just don't really like it. I mean, technically, this is a red candle. Technically, you could say this is a red candle because it does have a gap. And you know what? I guess the picture looks better now that I think about it. Because here's the deal. That's basically a red candle. Anytime you guys see a gap, like in this case, it's a gap down. Well, just pretend that gap is a big red candle. That's just really the kind of the way to read it. Now, the candle was a green candle down here, but that's not taken into account the gap. So I guess if you look at it that way, we could look at this on this 4-hour chart as a 4-hour supply. So that would make sense. I just didn't really dig that deep and find that out. But now that I see that, it's actually bouncing perfect. So there you go. Yeah. So there's your 4-hour bounce. And then not to mention the daily, if we just kind of, again, bring this over here like this to the bottom of this red candle and then the decline. So yeah, that makes a little more sense. Yeah, again, if you held a gun to my head, I have to short or buy, I'd be shorting right now. But I just don't have a good enough fundamental reason to do so. Not when it comes to the data, because if we go to my neutral items over here, okay, it's a -3, so it's getting negative data. But again, when we look at that higher time frame curve, it's just basically in the middle. And according to the edge finder, there's no help whatsoever on the sentiment nor the technical data. It's just kind of canceling everything out. So that's gold, that's silver, that's oil, pound dollar, pound yen. Those are the yen pairs. I'm still a little cautious on just because of the gigantic moves that we had last week when the U.S. did announce they were going to help intervene with the yen, okay? Help out the Bank of Japan a little bit. We got all kinds of movements. Dollar yen, I showed you guys, I think, a chart last week where we dropped 484 pips within a 45-minute time frame. Just a ridiculous amount. And then over that next 24 hours, we had 100 pip jumps, 200 pip jumps, 150, 250. It was just ridiculous. So it is kind of starting to thin out a little bit, or I should say kind of settle down a little bit. If we go to the dollar yen over here, just as an example, let's go to a 1-hour chart. I mean, it is starting to kind of base out a little bit of indecision because of all this nonsense that we had back over here. But dollar yen still pretty well neutral. I did identify this 1-hour supply up here if I'm only looking at technicals, but at that point, it's about a 3% hike from these swing lows. So I don't know. I'm staying away from dollar yen. It's too squirrely for my taste right now. Same thing with pound yen. It is at the top of the bullish list with the gold and pound dollar, but it's just kind of all over the place. And I'm just going to ignore it, guys. It's just a little too squirrely. I want the average true range on these things to kind of calm down a little bit. Before that notice came out, pound yen was averaging about roughly 115 pips in this area. Well, now currently we're at 140. What is it? 150 pips. It was all the way up at 170 pips a couple days ago. So when this average true range starts to balance out and come down, a little more closer to where we were at June, July, same thing with dollar yen. Well, then I'll be a little more interested, but average true range is really going to help me to get in, help me to know when I can start looking for some buys or sells on this stuff. Dollar yen was around 70, 75 pips on average, and it's currently at 115 pips. So you see what I'm saying? Like, to get into a trade like that, for me, I would have to cut my risk in half because the volatility is still basically double. Right? Either cut risk in half or increase the stop losses by double. Right? It's a way to account for the excessive volatility that they're experiencing relative to their averages. Guys, ATR, average true range, if you want to study one thing today, go study ATR. Go study average true range, because a lot of traders use it to know when they can maybe double up their risk if ATR is really, really low relative to its average, or half the risk if it's double, like the yen pairs are right now. It's just a little bit sketchy out there, right? There's the potential, if you're using the same stop loss amount of pips right now, well, there's almost a double the chance that you'll get knocked out of your trade just based off of volatility alone. So a lot of really good traders will say that. I've heard a lot of really good traders say that as well. Some mentors of mine. ATR will help you to understand when you should be a little more careful, or when you're experienced, when you can be a little more aggressive with your risk. Does that make sense? I know that's probably getting, I don't know. That might be a little more advanced, but yeah, good stuff. All right, let me see what you guys got up here. Pound Swiss. Okay, you're looking at some Aussie dollar as well. Dollar yen. Yeah, dollar yen, like I just said, I just basically got nothing on it. Give me class video, please. What do you mean by that? Let me know what you mean. Pound Swiss. Let's get to that one. Was that on our list over here? I think it was. Pound Swiss +8. So got a very bullish score, looking pretty good for some buys over here. Buys only, by the way. Okay. When I get this bias over here, all these blue items, I've got no business selling. All these red items, I've got no business buying. So if you're on the side of the trend, guys, just from a 30,000 foot view, that in itself will help your case out, no matter what your trading strategy is. The average retail trader out there, when they get these really strong bullish readings and the trend is up, so many people try stopping it. So many people try taking the other side. Same thing on the bottom. When these items are showing us bearish scores and they're dropping like crazy on the chart, so many people try catching a falling knife, right? That's a sure way to get bit. It's a sure way to get your hand burned. Focus on the meat in the middle. When the trends start going down, wait for those retracements, right? Wait till you get a higher premium. If you got a strong uptrend, wait for those discounts. That's what the banks are doing out there, the smart money. Okay, Pound Swiss, strong uptrend. EMAs are going in my favor. We finally busted out of that equilibrium spot. So yeah, when it comes to pound Swiss, still waiting on that retracement. So, once we broke out of equilibrium here, we're basically sweeping this liquidity to the top. And now I just need to see a sweep to the bottom where the 2-hour zone is that I have down here. 2-hour demand with a lot of liquidity, creating that zone, creating the base, but also creating the legs out. So that's still the spot I'm looking at right there at 107.85 area for that possible bounce. So again, equilibrium, buyers and sellers agreeing on price, or they're just fighting it out, not getting anywhere. The banks get tired of it. They say, let's push price out so we can collect the longs, the breakout buyers. Their stop losses are going to be down somewhere in this area. And then they can sweep that, collect the liquidity on the downside, run into the demand zone, the orders, the unfilled orders, and then take the long the other way. So that's the play that I'm going to maintain on pound Swiss until something changes, right? Maybe price just keeps going. Well, if that's the case, I'll reevaluate my my alerts. I may not be as interested in this one down here. I may look for something a little closer to home, right? It all changes based off of how far away from a zone price moves. So this is my perfect scenario is, hey, let's get that drop right away. Then I'll be interested in the buy. Okay. So that's pound Swiss for you. I think you asked about Aussie dollar. Yeah, let's go look at the majors for you guys. So Aussie dollar, unlike some of these other dollar quote pairs, has actually broken and closed above the overhead supply. I was keeping an eye on this daily 4-hour. We also just barely went through that swing high right there. It's kind of hard to see, but you can see we just barely went through. So that opens up a couple more options for me. Was also looking at this 4-hour here. And I think this was the one that might not have given me a whole lot of liquidity. Let's go down to a 1-hour. Yeah, this was the zone, guys, that just didn't really give nothing but average volume. Right? It just didn't give anything great. I didn't have any yellow or red candles on these legs out right here. So that's average volume. That's most likely some retail type activity, right? Right here was where the volume was because that was Friday's NFP report. But as you can see, that price already bounced in. That's a mitigated zone. I can't reuse that zone. I don't want to reuse that zone. Liquidity has already been taken from the zone. I want a zone's full liquidity if I'm going to put my money on that. Not after 40% of the liquidity has been swept up, right? So anyway, for me, for Aussie dollar, it's still going to be the retracement clear down here is one option. That's a very good discount down to this zone on top of the zone. Okay, 2 zones, technically within a daily. So that's still going to be my favorite. Now, I honestly would prefer that we get something new created over here. You know, the PPI release, it did give us a little bit of liquidity. That's 1 hour. What's 30 minute, 15. Yeah, we got yellow candles, but yeah, if you go all the way down to a 10-minute or a 5-minute, okay, you can see where we did have that 5-10 minutes. That first 5-10 minutes was basically the biggest part of the liquidity from the PPI release today. Obviously, cooler dollar because of that, so Aussie dollar flew up. As far as the structure of these zones, though, let me go down to a 3. Yeah, see, here's the thing. We're having to dig all the way down to smaller time frames, and I'm just not a huge fan of this. I don't see the liquidity picture on my time frames. So as far as I'm concerned, this is just sideways congestion. So I think I just need to see another break, a strong basing structure, a strong leg up. And I don't think we have anything major to help us with that, do we? If we go to tomorrow, we got retail sales, some core numbers, the University of Michigan numbers coming out as well, but they're more medium impact. I don't know. If those numbers just get really disgusting, then that would help, obviously, the case for the Aussie. Give us a big, strong spike to the upside, hopefully. We'll see. But, you know, I don't want to bet against my own economy, but those would probably have to be really disgusting in tandem for me to get the candle structure that I want to see in order to get a retrace for a buy. So, yeah, I think Aussie dollar has probably fallen off my list of excitement just a little bit. Now, it's obviously still on the overall list, +8, but Euro dollar, pound dollar. Let's go look at those. See if that gives a better opportunity. Pound dollar was at the very top of the list. Let's go to pound dollar. So pound dollar did break through the overhead supply as well. So that frees up for the way I trade this 2-hour demand that was created back on August 7th, 134.50. We'll just call it 134.5. I drew up prior to this happening yesterday what I wanted to see. Break of the zone, close, which we didn't get the close. We got the wick. We didn't get the close. So break and close, retrace for the possible buy. Did we get a close on some smaller time frames? Yeah. No, we didn't. Yeah, we didn't really get a close. So I'm probably even going to be careful with that. Hell, even if I go to a 5-minute, you can see it was just nothing more than a wick, and that's where all the liquidity stepped in. Okay. Liquidity sweep, push to the downside. I don't think I like that. I don't like that. Now, would I still consider a trade down here on the 2-hour if it did retrace? Yes, I just will not put a full risk on it. I'll just cut the risk in half. Just kind of nose in there. Because at the end of the day, it is our strongest currency pair. So I think I can be I think I can afford to be a little bit more aggressive because of that. While I didn't get the close I wanted, it's still a very strong score, moving pretty nicely. So I'll still keep this alert in mind, the 134.5, just with less risk. Does that make sense? See, depending on how strong a score we get over here on the Edge Finder, oftentimes helps me to know if I can or cannot be a little more aggressive, whether it's a long or a short. If I had a +4 on pound dollar, I'd probably be avoiding that. But because it's giving me a +11, I'm in double digits. Hey, I might be able to look over that one little piece of data I was looking for in the as far as the fact it did not close. Yes, it broke it. It did not close though. Let's see what you guys got over here. So yeah, I went over gold, sapphire, Kiwi CAD. Ooh, that's an interesting pair that we don't hear very often, and it's at the bottom of my watch list. Why is it at the bottom of my watch list? Well, it's just one of those pairs I don't trade very often. It's also one of the slower moving ones that averages about 48 pips movement a day. As far as the ATR, again, guys, average true range, it'll help you to know when things are lively or when they're just in the dumps or going slow. This is one of those pairs that's like molasses in a fridge. I kind of joke about that from time to time. Let's get my moving averages turned on over here. All right, so overall, so we're getting some higher highs, higher low structure going on. We are down in a discount area. You can see I've got a couple zones below this area, but we do have a kind of a, I don't know if I'd want to call this a triple bottom, but I'd at least call this a double bottom, especially if we go to a smaller time frame right here. So for that reason alone, I think there's probably some liquidity underneath. Okay, you guys see me draw this up from time to time. Liquidity here, stop losses. Liquidity here, stop losses. So these are buyers pushing price up. They got to put their stops somewhere. Right here, these are buyers pushing price up, and there's probably a lot more stop losses because they successfully were able to break this structure up here. And some structures back in the past as well. So that's going to be my favorite. If I'm trying to buy Kiwi CAD, now I haven't even looked at the Edge Finder yet, but if I'm just looking at the technical side of this, well, at least I have a 4-hour demand here. I have a 4-hour demand here. But the other challenge we face, if we dig into this zone a little deeper, I don't think the liquidity is that exciting. Let's go double check on a 1-hour. Yeah, my VSA candles up here, green. That's average. I don't like to trade average volume on the leg out. This one down here is blue. That's below average. So yes, I drew this up as a demand zone structure, but the reality is the effort didn't really match result. Not to my liking. Okay. So, but we do have some liquidity under here. And what does Edge Finder tell us? New Zealand. That was New Zealand CAD, right? Yeah, New Zealand CAD. Yeah, I don't even think it's on the bearish side. Okay, so it's just barely on the bearish side. Well, yeah, if we're looking at it on a bearish level, then, well, my EMAs aren't helping and my structures aren't helping. Daily, higher high, higher low. Okay. If we break these structures, if we break through the demand zones to the downside, then that could change things to where I'd be able to flip and start looking bearish, because by then, not only have we broken the structures, we've broken those liquidity pockets, we've broken these light liquidity demand zones, but we've also got our moving average flipping over to the downside at that point. 8 EMA, which is the dark red, is currently above the 21 EMA. So my faster moving average, my faster moving one, is still basically pointing bullish overall. It would have to flip underneath, and that's going to take a day or two to do. So it would be, for me, the way I trade, it wouldn't even be till early next week before I could even consider start looking at some bearish flips on this. And that's if it jumps through the hoops that I require. The double bottom, liquidity sweeps, the demand zones, take them out, and so on and so forth. So realistically, I'd have to be looking for something like this if I'm just looking at the daily. Okay. Break the liquidity, break the double bottom, break the demand zones, close, and then retrace for a premium for a place to short to the downside. See how that's a lot of hoops? It's a lot of hoops I needed to jump through. And oh, by the way, that's off of something that's just barely tall enough to ride the roller coaster, meaning it's just barely on the bearish list. Right? So I hope that helps on Kiwi CAD. My gosh, I feel like every time I get to the 29-minute mark and my alarm yells at me, I feel like I've been talking for 10 minutes. All right, guys. Let's see. Do I have any last second ones? Did I go through pound dollar for you guys? I don't think I did. Let's see. Pound dollar. Yeah, I did go through that one. 2-hour demand. Euro dollar, that's also at the top. The euro dollar, guys, is still fighting that overhead supply. That's the reality of it. That's why I did not take a trade off of this higher up demand over here, high on the curve. And it's also because we bounced into that daily supply. Chewed right through it. Okay. Chewed right through that demand zone. So that's why I avoid those zones when we were running into landmines on the other side, higher time frame landmines at that. So anyway, guys, have a wonderful day. Hope you stay safe out there. Remember Nick's code for All Out Prime. A1 Live is the code, 20% off the account of your choice. QR code, go to alloutprime.com for more. We'll see you tomorrow. We'll run it back. Take care out there.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.